Start. Start करिए sir.
Yes. Hello, good evening everyone. So on behalf of WRC of ICI, I welcome you all for third day of our litigation series. We have two wonderful sessions today with our wonderful faculties who have already joined. The first one is offences and penalties under GST, which will be covered by Rajiv Luthia sir, and the second one would be advanced ruling procedure and issues. And obviously we all of have questions that whether we should go for the advanced ruling or not. So I'm sure all of them will be answered by our next faculty, Abhay Desai ji. So with this brief introduction of the session, I think we will quickly move for the session. The first we will start with ICI motto. I request everyone to kindly place your hand on heart for ICI. Mishra ji.
Yes sir. दो मिनट.
य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्मिमाणः निर्मिमाणः तदेव शुक्रं तदेव शुक्रब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्द्वैत 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 एतद्द्वैत.
Thank you, Mishra ji. So now I request CA Bhavna Radheshwar, coordinator for today, to kindly introduce our faculty for the day.
Yes, sir. Good afternoon, sir. I am Bhavna Radheshwar, and I'm really privileged today to introduce our faculty for today, this session. He's a qualified chartered accountant, and he qualified in the year 1987. He is a DSA he has DSA of ICAI. He has qualified LLB from Mumbai University in the year 2015. He is practicing under the firm name and style of RJ Luthia and Associates Chartered Accountants since 1987. He is a practicing service tax and GST practitioner. He has delivered talks or at seminars organized by various forums like WIRC of ICAI, BCAS, CTC, AIFTP, and GST-PAM on various topics on service tax and GST. He is a contributor to column of GST law update in monthly newsletters published by WIRC of ICAI. He is a contributor to column of service tax law updates in monthly journal published by CTC and GSTS in place of service tax. He has authored various publications of ICAI Delhi, WIRC of ICAI, and BCAS on topics of service tax and GST. He is co-opted member of Indirect Tax Committee of Central Council of ICAI for years 2010, 2012, 2017, and 2022. He was a special invitee and convener for IDT Committee GST Group of ICAI for the year 2016 and 2017. He was a chairman of Indirect Tax Committee of the Chamber of Tax Consultants for the year 2009, 2010, and 2015. He is presently an advisor to Indirect Tax Committee of the Chamber of Tax Consultants. So his experience is vast, and his knowledge is abundant. We are very privileged today to have him. Sir, I welcome you to deliver the session for the day.
Thank you. Shall I start, sir?
Yes, sir. Please, please.
At the outset, my sincere thanks to the organizer, WIRC. Thanks, Bhavana, for your kind word of introduction. Respected my co-faculty, Abhay, Desai, our regional council member, Gautam Lath, seniors and friends. Well, the entire structure of this litigation series spread over 4 days with 8 sessions, well structured, and a lot of compliments to the organizer for having considered this topic at its vast length. Of course, this is very, very vast topic, and n number of hours perhaps may not be enough to learn or rather understand it. And over and above the GST itself, although a subsume of so many laws, but still it's new for the department as well as the practitioner as well as for business community. Plus, we don't have the tribunals as on today. So by and large, the litigations are concerned is at a very ground level, maybe at adjudication or first appeal or straight away to the high courts. That's the reason perhaps we don't have many precedents available barring those writs in the high court. Well, friend, the topic it allotted to me within the span of 1.5 hours next is about the offences and penalties under GST Act. Friends, the chapter 19 of the CGST Act is the one which I have been allotted, which deals with these provisions related to offence and penalties, and it covers section 122 to 138 of the CGST Act. There are quite a numerous penalties, plus the situations have been given, the quantifications, the amount upper cap has been provided, plus the very important part is it is
राजू सर,
yes sir.
राजू सर आपका पीपीटी नहीं दिख रहा है सर.
नहीं दिख रहा है.
नहीं सर, 2 सेकंड में वापस आपको ऑप्शन देता हूँ सर.
हाँ, यानी मैं डिस्कनेक्ट करूँ क्या?
हाँ, स्टार्ट में नहीं किया था सर. ये देखिए वापस से आप पीपीटी शो माय स्क्रीन करिए. यस सर.
इट इज आवाज तो आ रहा है सर, आवाज आ रहा है ठीक से?
सर ऑडियो भी आ रहा है, वीडियो भी आ रहा है, पीपीटी भी दिखाई दे रहा है इस समय.
अच्छा, my apology for this thing, sorry. Okay, fine. See, so there are various penalties in these sections, total 19, 122 to 138, and various scenarios have been then notified in the particular relevant statute. What I have done is I'll take you through all these penalties which are being notified or prescribed under various sections. Plus, during this my presentation, I'll give some of the live example to the extent concerned, and we'll also give reference to some of the decisions in the earlier regime, which is excise and service tax, which are dealing with the scenarios of penalty. Of course, may not be the same, but we can draw the analogy from there while defending such cases. So with this, I'll start my presentation per se proper. In case of any issues, I think you can ask subject to the decorum of the organizers. You can make the session interactive. I have no issue, but I have about 35 plus slides to deal with. We can opt the other way around. Bhavna, you can take up the questions at the end and somebody let the people put it in chat box. That way also we can do it so that actually I can give justice to the job within the time allotted.
Okay.
Yeah. To start with, what is meant by the offense? First of all, because this deals with offense and penalty, we need to know that whether this term has been defined, at least not under the GST Act, but then if that being the case, what is the dictionary meaning to this? It says that there is a crime or illegal action or something that outrages the moral or physical senses. This is what the dictionary meaning of the offense. So at least we can say it's may not be a crime always in that case, but something that outrages the moral or physical sense, but illegal actions. Now that means, in nutshell, we have to identify, or rather we have to define, that will be something like breach of law, like we are dealing with GST law or the rules as the case may be. Now under GST, it is a breach of the provisions, which we can conclude as offense to the extent. And penalty is also one which is not been defined, but from the various jurisprudence we have or the principles of the interpretations, if we go through those, then the term as per this jurisprudence, the penalty means it's a punishment or some kind of a money being imposed by the statute, and which is to be paid as a punishment for commissioning those offences. Even there can be beyond money also, there can be imprisonment to that part. So in nutshell, a breach of law will be an offense, and punishment for committing such breach or an offense will be a penalty. That's how the penalty and offenses will go. The sections which I am dealing today will be a duo of both. So what is a breach, what is an offense, and then what is a consequential penalty to that is the one which is the topic of the day, which I'll take you through. To start with, the main section is 122 with the subclause number 1, which lists out various penalty. Exactly 21 are the numbers. Start with subclause 1 to subclause 21, that is of 122.1, and this list out. If you look at all those penalties, it rotates around 4 type of the violations by and large. The first is about the issue of fake or wrong invoices. Means I have tried to classify the different type of offences which are listed and for which penalty have been levied or rather been proposed for in this particular statute. So first is issue of fake invoice or wrong invoice. The second is about the evasion or non-payment of tax, including ITC. So wrong ITC also partly fully. The third will be other miscellaneous offences which will not fall under any of the other, any of these two above. And the last is commission of fraud, where intention is to defraud the revenue. So these are the 4 baskets by and large we will able to classify the all the offences which are listed in section 122 of the Act. Now we'll go one by one of each of the offences. I have not put it verbatim, but try to put it in a layman's language for a better understanding. The statute might have used some word which are very technical, which I don't want to put it for the better understanding. Now the first and foremost is the offences related to which is rotating around the fake and wrong invoices. Now first of all, try to understand this penalty under 120, the offences under 122 subclause 1, the penalty is leviable only to taxable person. This is a very important point one has to note. It starts with it is only to a taxable person. So now if you are not a taxable person, this section 122 subclause 1 does not apply to you. And the term taxable person is also been defined for the purpose of statute, and which is a subclause 107 of section 2, which says that a person either who is registered or is liable to be registered, and that is governed by section 22 and 24 of the CGST Act. So foremost thing is that you need to be a taxable person, otherwise you will straight go out of the section of 122. This is foremost thing. That doesn't mean the one who is not registered person is not liable. There are other penalties for that. So that is how one has to work it out or distinguish rather. Now, what are the various type of penalty which falls into this basket of fake and wrong invoice? The first is if you supplied any goods or service without issuing any invoice, or maybe a false invoice or incorrect invoice. That means the invoice has not been raised correctly. It may be short or it may be not at all raised, as the case may be. That is the first offense. Or secondly, if you have issued the invoice but not supplied the corresponding goods or service, this falls in 1 and 2. The third is about the taking or utilizing. See, the word is take or utilize. There are 2 ways. Even if taking a wrong penalty is one, or utilizing, obviously utilizing will happen after taking, but for taking itself is also being covered within this, and that is without actual receipt of the goods. They have used the word actual receipt of the goods or service, either fully or partially in contravention of the rule. We know section 16 is the one which deals with it. Then who has to and how to avail the credit and how to utilize. So if you have not followed this or wrongly taken, or rather you can say the more important point, it should be in contravention to the rule. The fourth is about the issue of an invoice or document using the registration number of other person. So that means you have raised an invoice, but in that you have not written your registration, means somebody else's registration number you have used. That means it is a kind of a bogus bill to that extent. This is also one of the penalty. The various type of penalties I have given the subclause numbers against each and every penalty based on the act is concerned. So 122 subclause 1, it is 1, 2, 7 and 19 are covered over here so far. The next is still going by the same. These first four which we have dealt just now are related to invoices are concerned, whether it is fake invoice or wrong invoice. Now the second class of penalties which are falling within this particular basket is under the evasion and non-payment of tax. It is not related to invoice but evasion and non-payment of tax. And what are those? Collect any amount as tax but fail to pay the same beyond the time limit of 3 months. One has to be very careful in understanding this. The law uses the term that if you have collected the pay tax and not paid beyond the period of 3 months, that amounts to a violation and it's an offense, and for which penalty is there. I will like to add up one or two things over here, that sometimes it happens that the person is not able to make the payment, but still his intention is always bona fide. He don't want to be wrong at the wrong side of the law, or don't want to avoid or rather delay the payment or defraud the revenue, but the circumstances are such which forces him or rather compels him, and that becomes a delayed payment. To give an example to that extent, of course you need to justify with each and fact. There is no sacrosanct formula for this, but based on the facts and circumstances of the case, one can say even if the payment is made beyond 3 months, still that is not liable for any penalty unless you have a guilty mind. We can distinguish very easily, like somebody bangs the person while driving the car. The intention is always not to kill him, but it may be by oversight or by a driving mistake or some kind of thing which we call it as an accident. So in that case, the courts will never hang that person till death, because that is what is an accident. There was no intent to kill, there was no murder. There's a difference between accident and murder. The same thing will apply, same analogy and principles will apply when we deal with the penalty and consequential, deal with offenses and consequential penalties there too. So here, although the terms have been used that beyond 3 months, but still based on the facts, one can say those are not the penalty and we can defend. But of course, you need to have proper documentation, justification, reasoning, etc. And your bona fide is concerned, you need to be based on your facts and the documents of the case. The next is about the collect tax in contravention of the act, but fail to pay. Sometimes you have collected more tax, or sometimes you have collected tax even on the transaction which are not liable to tax. So it is in contravention to the act. And then once you collect, you are always a trustee of the government, this being an indirect tax. You cannot make a profit out of tax. There cannot be unjust enrichment. So you need to discharge the same. And that's why also the time limit has been specified. And there also, if it is delayed beyond 3 months, there is a clause, subclause 6, subclause 4 provides for the penalty for this particular occasion or consequence also. The failure next is fail to deduct a TDS as per section 51(1), and having deducted, you have not paid or have deducted less than what is been required. All three are covered in this subclause 5. That is also a violation. For this, these penalties are being levied under this 122. The next is fails to collect the tax. Like TDS, we have TCS also, that e-commerce operator, etc. They fail to collect fully or partly, as the case may be, and even after collecting they have failed to pay. Then also that is considered as a violation, and it is a rather you can say circumstances or scenario for invoking the penalty. And then take or distribute ITC in contravention of section 20. That means the input service distributor. As a ITC, you take a credit which you are not eligible, or if you take more credit than what you are eligible, and thereafter you distribute incorrectly, that is also a violation, and that is subclause 9 is concerned. So these are all the few falls into second basket, and which deals with non-payment of tax or the ITC is concerned, or wrong availment of ITC. Now we'll go to the third basket, and which is about the commissioning involving of the frauds are concerned. These are specific, nothing to do with is a non-payment, short payment here, but it is intention is to commit the fraud. We have seen the baskets. That's what we have divided for our better understanding all those 21 instances. Now here what it says that the subclause 8 says fraudulently obtained refund of tax. You have availed or obtained or applied or obtained thereafter a refund of tax with a fraud. So there's a clear-cut guilty or culprit mind. The next is falsifies or substitute financial records or produce fake accounts or document or furnish a false information or return. But more important, this submission of this is not important. What is more important? The words attached to this is with an intention to evade the payment of tax. Sometimes what happens, there is inquiry, summons, etc., or proceedings are on, and you submit the document. Now, in that process, there was, suppose if you prove that there was no intention to evade the payment of taxes, it has happened in a normal course of behaving this thing, and you, of course, there may be a short payment, but intention is very important, and that is why the words have been used in this subclause term with an intent to evade the payment of tax, which is I have highlighted in a red color. So more or less, if you read the provisions, you need to give apply the principle of nociter soicis and always try to say there has to be presence of guilty mind or mens rea. The next is furnishing false information regarding a registration particular, maybe at the time of registration or maybe over a period of time when it is during the amendment or any such scenario. So if you give some wrong information, let me tell you, if you give your telephone number incorrectly, etc., one cannot say there was an intention of a fraud because you are otherwise compliant. So one again has to see that by giving this wrong information, whether you have a guilty mind or not. That is very important. Of course, the interpretation by the department and the ground realities of the officers, you will always get notices, the proceedings will start, but you will come out of these penalties at a higher forum, of course, at the cost of litigation. The next is suppresses the turnover leading to evasion of tax. See, read every line. Suppression, turnover is suppressed. Mere suppression is not enough. It has to lead to evasion of taxes. Sometimes you miss out some bill. You know, you have thousands of bills, and if you forget about, say, 1 or 2 or 5 bills, the amount is like you pay 1 crore rupees tax and missed out, say, 50,000 or 20,000 rupees. We can very well justify that when the person is paying 1 crore, another 20,000 would not have proved that it was his intention to defraud the revenue. It can be omission, it can be error, but without there is intention of evading the taxes. That is all based on the facts, but of course that is also one of the clause over here, clause number 15 of the act, for which the penalties have been provided for, or these are the offenses rather. The last is further to this basket, supplies, transport or store any goods which he has reason to believe are liable to be confiscation. So like if you are either not a supplier, but even if you are a transporter, or you may be a storekeeper or warehouse service provider to that extent, and if you store some good or transport such good which you are aware that those are liable to be confiscated, that means you are supporting, encouraging, or you are party to that particular evasion transaction. And for here, you may not, goods may not belongs to you, tax liability also may not belongs to you, but still, now only point over here is this, I would like to draw at the beginning of this 122, it is said that it is a registered person, that means a person liable to register. Sometime it may happen that the transporter is concerned, he may not be liable to register. Then how this section will be interpreted by the court of law, that time will tell us. If suppose transporter has opted not to pay tax and entire transaction of his are liable for registration under RCM, in that case he will not be a person falling within the definition of person liable to pay tax or liable to register. So in that case, how come this penalty subclause 18 will be interpreted, that based on the show cause notice one can defend the case that it is not applicable to him. Of course, it depends upon the facts of the case, but there is a possibility to come out of this if at all you can justify. The next is if you tamper with or destroy any material evidence or document, and next is dispose of or tamper with any goods that have been detained or seized or attached under this act. So these are the few more penalties which fall in the same basket of commissioning of the frauds are concerned. And the last is the residuary items under these 21 penalties notified in this. The one is where a taxable person is liable to be registered under this act but failed to obtain the registration. So yes, he was liable and still he didn't obtain registration. Or if he has obstructed or prevented an officer, any of these CEO, like officer of under the proper officer, let me tell you, in discharging his duties under this act, if you prevent him or obstruct him, then also there is a penalty. And the last is if he transpose any taxable goods without the cover of document. Normally you need to carry your invoice as well as e-way bill, etc., as the case may be. Then in that case, if you don't do that, itself is also a violation, whereby penalty can be invoked or levied on this. So friends, these were the total 21 type of the offenses which have been, yeah, 2 more left out, I'm sorry. That is, fails to keep and maintain and retain the books of account and document which are prescribed in the statute, and fail to furnish the information or document called for by the officer under this act, or rules, or to or having furnished the document or information, it is a false during any of the proceedings, then that is also an offense. These are the total 21 type of offenses which have been notified under section 122 subclause 1 the statute carries out. Then that, what is the consequence of this? So the penalty has been prescribed in this case. It is a higher of the amounts, the higher of what, 10,000 or. So there are 21 consequences in 21. You will find the registration has not been done, sometimes the tax has been not paid, refund has been taken, ITC has been utilized, TDS not deducted. So it's a different type of consequences, the violations. So therefore the consequential penalties are also is 10,000 rupees or any one of these as applicable. Like if you have evaded the tax by not paying or short paying, then amount of tax evaded. If it is a case of TDS, then tax to the extent you are not deducted, or having deducted you are not paid, or vice versa, TCS provisions. Same way in case of ITC, if you are wrongly availed, to the extent you are wrongly availed or utilized, or it is distributed as in a capacity of ISD. And the last is if it is a case related to refund, to the extent you are wrongly obtained or availed or claimed the refund. Whichever applicable to you based on the contraventions are concerned, that amount or 10,000, whichever is higher, will be the quantum of penalty prescribed under section 122 subclause 1 is concerned. So this was it's a big long list of penalties, but of course once again it is applicable only to the registered person. Now after this 122, there is another clause, section 122(1)(a). Now mind well, the major difference between 122 and 122(a) is concerned. It starts with this penalty is not necessarily applied to a person registered or liable to register, but it is applied to any person. So the word used is a taxable person. Here it has been used as any person. Now here you need not be registered. Now what are the violations that is being notified? Because penalty has to be invoked under correct section. So department is, you have to be very careful when you are litigating or attending to any of the litigation matter. You need to read the show cause under which section has been invoked and whether that section is applicable. So any person who refrain the benefit of following transaction, who retains the benefit of following transactions, and at whose instance such transaction is conducted. Now they have listed out 4 type of transactions in this section 122(1)(a) is concerned. The first is if he supplies any good service without any invoice or issue an incorrect or false invoice. Now there may be a case the person whose turnover is below the taxable limit, or maybe it is completely 100% exempted turnover as the case may be, but still the penalties can be levied if he is supplying any goods, and thereafter if department, even if he is not registered, department proves that he has retained the benefit of the transactions of that particular supply by not issuing any invoice, even if he is not registered, penalty can be equal even if he is not a taxable person. The same second the instance is if he has issued the invoice but not supplied the goods to that extent. So in that case, by and large, there also it is same. The penalty, if you are below taxable turnover but your goods are taxable, you may not be registered, and in that case you are issuing the bogus bill or hawala bill without a supply, then you are very much covered over here. 122(1) subclause 2 is concerned, supplying the material without bill or supplying the bill without material as the case may be. The third and fourth is concerned, to my mind, may not be appropriately placed. That's what is my interpretation here. The third clause specifically talks about takes or utilize ITC without actual receipt of the goods, either fully or partially. Now, just try to understand, the penalty is leviable to any person. Now, if you are a registered person, you are already covered in 122 for this violation. That means this is predominantly for person other than registered person. Of course, registered person is also covered over here because any person covers anybody. So they can vary much, but there is a 122(1) section is already there for register. So by and large, department should invoke, because for same violation, two separate penalties cannot be levied, and rather it can be notified because just same sort of violation. So taking utilization and availment of the credit is available only to a registered person as per section 16. And with this section, penalty section 122(1)(a) starts with any person. So if I'm an unregistered guy, how I will able to utilize and avail the ITC? Absolutely, virtually impossible. So in that case, this particular clause becomes redundant. Of course, yes, they can very much levy to registered person, but he is already covered by the earlier 122 is concerned. So to that extent, I have put question mark how in practical life this penalty can be invoked for a unregistered guy, because that kind of violation will never happen unless you are registered. You will not able to avail or take ITC. The same way, taking a distribution of ITC, yes, you need to register first and then only you can do it. So that's why I written question mark. Of course, I'm clarifying that any person include even taxable person that way, but then in that case, two penalties for same violations will be there. So here the penalty amount is very important, because when it is invoked under 122(1)(a), the amount is concerned and a quantification of penalty is equivalent to amount of tax evaded or ITC. Here there is no fixed amount of 10,000, 25,000, nothing. It is straight away amount of tax evaded or ITC availed. So if you compare between 122(1) and 1A, there are major difference. One is to registered person, this is to unregistered person. There it says it starts with 10,000 or the amount. Here it is, there is no 10,000, straight away amount of tax ought to be evaded. With this, the next is 122 subclause 2, and that is again to a registered person. Now 122(2) is to registered person. What is the kind of violation? It is a registered person who supplies any goods or services or both on which any tax has not been paid, a short paid or erroneously refunded, or where ITC has been wrongly availed. So it is registered person first of all, and it is only in these two scenarios the section 122 subclause 2 provides for the penalty. And what it say, the defaulter would be liable to pay penalty to what extent? First is if it is for a reason other than fraud, because I told you there's a difference between accident and murder. So same way in taxation, there will be either there will be intention to defraud the revenue, or sometimes it is a bona fide belief. Result may be same. In both the case, taxes have not paid or short paid, but the intention is mens rea is the one which is very important. So the first clause, it says that if above default happens because of a reason which is other than fraud or willful miss, so there is no mens rea, then the amount of penalty is 10,000 or 10% of tax due. When you refer to section 73 related to SCN, I'm sure the other faculty related, Pritam Maure sir, perhaps in this particular virtual series, he must have dealt with this SCN. So in that penalty is 10,000 or 10%, whichever is higher, that is a penalty being invoked for this. But whenever the same violation is on account of the fraud, that is a guilty mind or mens rea, then that amount becomes 10,000 or tax. So major difference is that 10% of tax, and now it is 100% of the tax, and against whichever is higher. So culprit mind 100%, non-culprit mind 10%, subject to minimum 10,000. That is what in nutshell is the penalty 122 subclause 2 is concerned. With this, we'll go to section 122 subclause 3. Now here again, this penalty is to any person. See, wherever there is any person, every time we be careful, registered person, any person. These two terms have been used interchangeably. They have used taxable person, thereafter any person. So here again 122 subclause 3 is to any person who aids or abates any of the offences which are specified in clause 1 to 21 of 1.1. So that is what we have just seen in subclause 1 of 122. If any of this, if he abates or if he aids, so even if he himself may not be beneficiary, but he supports in this thing, if he is involved in that, then he is the one. Or secondly, if he acquires possession of, or in any way if he is concerns himself in transporting. Normally, suppose Mr. X is a supplier of the goods, he is supplying the goods without raising the invoice to full amount or for zero amount, but there is another guy who is just a transporter for some token amount of transport charge he is transporting. So naturally the tax which has been evaded, the benefit has gone to supplier or receiver as the case may be. Transporter has no benefit whatsoever, just is concerned with his amount of transport charge, but he has supported or encouraged or abated or he has aided this entire violation or contradiction to the law. So acquires possession or in any way concern himself in transporting, removing, depositing, keeping. So even if you are a warehouse keeper, then also, or concealing or supplying or purchasing. So wide connotations have been used in subclause, or in any other manner deal with any goods which he knows or has a reason to believe are liable to be confiscation under this act or rules made thereunder, then that is also one of the violations. So it is the coverage is very vast. The next is if a person receives or is in any way concerned with the supply of, or in any way other manner deal with any supply of service which he know or has reason to believe are in contrast. The first case may goods are liable for confiscation. Here service cannot be confiscated, but that's why they have envisaged a scenario that the provision of service in contravention of the provision of this act or rule made thereunder, then that is also one of the violation which has been notified under 122 subclause 3 is concerned. Now fourth is if he fails to appear before the officer, proper officer, in case of a summons proceedings to give his evidence or produce any documents, explanation as the case may be in an inquiry proceeding, that is also violation. And the last is fail to issue invoice in accordance with the provision of this act. That means now e-invoicing is also mandatory, you know. So that is also, if you don't do it, that is also violation covered over here. If you don't give invoice, that's okay. If you give, that is a violation. If you issue the invoice manually rather through the IRA, then also there is a violation. So those are all covered over here. And fails to account for an invoice. So having issued the invoice, you don't record in the books of account. That is also been a violation over here. Now all these 5 particular violations, or rather the offences, the penalty under 122 subclause 3 is been prescribed, and that should be penalty which may extend it to 25,000. That means the penalty can be levied, but they have prescribed higher amount. It is not that 25, it is not penalty of 25,000. So any of these violation, the department can levy anything from 1 rupee to 25,000, anything that they want to levy, but the upper cap is 25,000. It is not 25,000. Generally, you will find always it will be the 25,000 amount, but mind well, there's a discretionary powers have been there, and it can be maximum extended up to 25,000 rupees. So some of these penalties, 122.1, there were 25 offences. It was leviable to taxable person. The amount was 10,000 rupees or tax or ITC, whichever is higher. 122.1a, to any person who retains the benefit, that means he need not be a registered guy. In that case, the amount equivalent to tax sought to be avoided. That means 100% of tax or ITC as the case may be. 122, it is other than fraud. There are 2 scenarios they have given. If it is other than fraud, then you have 10,000 or 10% of tax. If it is with fraud, then 10,000 or tax ought to be evaded, whichever is higher. This is what so far so good we have dealt. And 122.3, the 5 instances, the penalty up to rupees 25,000. So these are, friends, 122.1, 1A, 2 and 3 with a listing of various offences and penalties there. Going further, friends, 123 further provide that if a person fails to furnish an information return, mind well, section 150 is the one which deal with information return, and with a deadline you need to file that information return. But as on to my knowledge, it is not being notified. Over a period, whenever it will be notified, if you don't submit that, there will be violation to that extent. and if you have not filed the returns, which is prescribed by 150, then penalty will be levied rupees 100 per day for the every day of delay, and subject to max of 5,000 rupees. As on today, this penalty is not of no relevance because we don't have a return being notified to be furnished. The next section is 124, and that is about any person required to furnish information or return under 151. Now, this is not our normal return, which we talks about that GST return. It is information return. So, if person is required to furnish any information or any return, and without any cause, reasonable cause, or furnish a wrong detail, having furnished detail, like department has called for some information in connection with any proceedings, okay, and you have either not submitted the detail or having submitted it is a false detail knowingly, then there is a penalty which is up to rupees 10,000 rupees can be levied. Mind well, this is not of 10,000, up to rupees 10,000. And if the default continues, then it is going to be 100 rupees per day thereafter for every day of delay. But then there is a maximum cap of rupees 25,000. Department calls for information from you from time to time for maybe it is in connection with verification, scrutiny, or etc. In that case, the notices do come. Ensure that you submit the detail. Otherwise, department, as of today, we have not seen many instances of these penalty section being invoked. But I'm sure over a period when the law matures, this 124 also will be invoked by the department. So far, so good. I have not come across the cases of 124 being invoked. The next is a general penalty, which is 125. Now, this is something residuary kind of penalty. We have dealt with so many type of penalty which is narrated or listed in the statute. If any other offense which is not listed or not covered here in above, which dealt with in the section 122 onwards to 24, then 125 provides for a general penalty for other offenses which are not specifically provided, and the penalty is up to rupees 25,000. Again, the word is up to rupees 25,000 rupees. So no need that the penalties which department is invoking, they will have to mention the violations or the offenses. If it is not listed, but the only thing is while dealing with this such kind of issue, please ensure that you go through the relevant section which is being alleged in the show cause notice and ensure that that particular section is applicable in the specific case, and department has a power to issue a show cause for levying that penalty. By and large, we found there are a lot in many of the cases the penalties are not being invoked correctly under GST in the initial days when we have received the show cause notice, as of now many a time. So you can very well defend the matter to the extent. I'm not here to tell you please don't worry about penalty evade, no, but when you are handling the case of litigation, it will be foremost important to see the violation which is being stated in the show cause notice is the one which is corresponding to the section which is being invoked in show cause for levying the penalty. Well, friend, then thereafter we have section 126, and which is a general discipline this department has to follow while dealing with the penalties are concerned. Having invoked the penalties, before levying the penalties, the law provides for the discipline which they have to follow. This section is very interestingly worded. I don't think it is of much great help to you. If you go through the section fully, you will come to know what it provides for. No penalty can be levied for minor offenses. Now, minor offenses, department cannot levy the penalty. And if you see what is meant by minor offenses, the minor offenses for the purpose of this statute is if the amount of tax involved is less than 5,000. So I think 5,000 is such a small amount. It's a very peanut. For the department cannot invoke the penalty. That is what this section. I don't think 5,000 is a kind of thing for which person would like to litigate, because litigation cost itself will be more than that. But keep back of the mind when you're dealing with up to 5,000 they cannot. So tax regulation or procedural requirement, and in particular any omission or mistake in documentation. So when you have filed some, say, application for registration or some other forms or documents which you have submitted during any proceedings or a summons, etc., and which can be easily rectifiable. Even during your refund claim also you submit certain documents and file the forms. And if those are something by oversight, etc., and there is no erasure on portal, once you upload, then even if you notice the mistake, you need to rectify it same with the support of the officer, because that facility for rectification directly may not be available. So if something is rectifiable and it is made without the fraudulent event, see, this is very important. If there is no intention, there is no mens rea, with the intent of gross negligence, then that will also not be liable for any penalty. And they have defined the word: for the purpose of this section, an omission or mistake in documentation shall be considered to be easily rectifiable if the same is error apparent on the face of record. So let me tell you, it may happen you have filed a refund claim which is say 5 lakh rupees, and while filing the form you have written 50 lakhs rupees. Now it is typo error, you added 10. I'm just giving an example to the extent for understanding. Now all the document supports it is 5 lakh, 5 lakh, 5 lakh. It's only the claim is appearing ultimately 50 lakhs you filed. So there is a genuine mistake which is a clerical error to my in my view, and there you can very well say it is a rectifiable, and for that the penalty cannot be invoked. There is no intention. Of course, let me tell you honestly, having done this, you should not get that 5 lakh rupees refund. Even when proceedings start, that time you should bring to the notice that is by mistake I have claimed 5 lakh. It is otherwise, sorry, 50 lakhs, but it is otherwise 5 lakhs only. That kind of thing is there, then 120 you can come out of it. The principle of natural justice department is duty bound to follow. So the section provide that no penalty shall be invoked or imposed on any person without giving an opportunity of being heard. It has to be given. We have come across a couple of cases, especially with the State Department when it's handling. The show cause have been issued and orders have been passed without any hearing being given, based on the only written submission. In spite the physical hearing, or rather the personal hearing was asked for, and penalty was levied also. So that is which is completely in contradiction or violation to section 126. The provision of this section shall not apply in case where the penalty specified under this act is either a fixed sum or expressed in a fixed percentage. We have dealt with various penalties in the earlier slide. You have seen somewhere it is 10,000, 25,000, or 10%, those kind of things wherever there. Now this section 126 is not applicable when you're dealing with those provisions. So it will be other than those. So fixed sums, yes, this section will not be applicable. Only to the extent you can say it is no penalty for minor breach, etc. Otherwise, principle of natural justice is applicable to all the penalties. The next is section 127. Now this is a power to impose penalty for the proper officer. The section provides that when the proper officer is of the view that a person is liable to a penalty and the same is not covered under any of the following proceedings. So there are various proceedings which is notified or rather prescribed under the statute, which starts with the audit or assessments or show cause, etc. So these are listed over here. 62 with assessment of non-filers, 63 with assessment of unregistered person, 64 is summary assessment, 73 is a show cause notice without suppression, 74 is with suppression show cause, 129 is related to evictable detention of goods, and 130 is confiscation of the goods or conveyance. Now these are only the 7 scenarios. In these 7 scenarios, other than these 7 scenarios, if the proper officer is of the view, not in this 7 scenario, other than 7, if PO is of the view that person is liable to the penalty, then he may levy such amount of hello I'm in the lecture. Call after 1 hour. Sorry. So other than these 7 scenarios, if the proper officer feels that you are liable for penalty for any of the offense, then he can levy such penalty. Here amount is not quantified. The section say that he can levy such penalty after giving a reasonable opportunity of being heard. So of course he can levy the penalty, but amount to what extent, that is not been provided in the statute, but he will give you opportunity of being heard. So this is 127 section. The next is a 129, which deals with the detention and seizure of the conveyance or the goods as the case may be. Now what this section 129 talks about? It says that if a person transport goods or if he stores goods in contravention of that. So here transporter is also involved, or the service provider related to storage and warehouse keeper. They are also covered within that. And if both of them violates or rather commits an offense of transporting or storing goods which are liable for detention and seizure. So knowledge of this fact must be there to transporter or the storehouse or warehouse keeper that the goods are liable for detention or seizure. In that case, their goods or the vehicle, as the case may be, will be seized. And for releasing that, 129 section say it will be seized. The goods will be seized. Goods may not belong to them, but the vehicle will belong to them, to the transporter. Both will be seized. In that case, the same can be released subject to a compliance or rather the consequential action taken by the taxpayer, assessee or the affected party. So what it says that there are two scenarios. The owner of the goods, after having been seized, if owner of the goods come forward for payment of penalty, if he comes forward and if he makes the penalty to the extent of 200% of a tax, assume there your goods are of 18%, 1 lakh rupees of the goods are concerned are being seized. So totally 18,000 is a tax element involved. This penalty provides that owner of goods come forward for payment of penalty 200%. So 200% of 18% of 1 lakh is 36,000 rupees. So you have to pay 36,000 rupees if the goods are taxable goods. There may be possibility the goods are concerned, you are registered, but the goods are exempt one. There is no tax involved in that. Then also there is a penalty, and which is lower of 2% of the value or 25,000. In the same example which we have discussed, if the goods are worth rupees 1 lakh, but it is not liable to tax, it is exempt, they are exempt, so there is no loss of revenue. Still 129 provide that you will have to pay 2% of that amount of value of goods, which is equal to 2,000 rupees of or rupees 25,000, whichever is lower can be recovered as a penalty for releasing this good under this 129. So when an owner is coming forward, there will be two scenarios, either goods are taxable or not taxable. He need to pay this. If he doesn't, then the goods will not be released. That is one. The other scenario is the owner of good doesn't come forward. Nobody comes forward, suppose, for payment of duty. Then in that case, that means owner is known, but he is not willing to pay the tax. The department has to recover by taking a suitable action. In that case, the amount will be different, that is higher of 50% of value of goods or 200% of tax. Just see the difference. If the voluntarily, if is coming forward, the owner is coming forward and making payment of tax, it's only one amount, 200% of tax. But if he is not coming forward, it will become as high as 50% of value of goods. So in our example, 1 lakh rupees worth of goods, the penalty can be either 50,000 rupees or 200% of the tax. Assuming 18% tax, it is 36,000. So 36,000 or 50,000, whichever is higher. So in both these scenario, the amount of penalty is concerned, there is a vast difference. And when it comes to exempted good, instead of 2%, the amount will become 5%. Otherwise, the 25,000 is the upper cap of the penalty. So it's the lower of these two. So 5,000 or this thing will be the amount of penalty that will be levied under this particular section. Now here what will happen, friends? Sometime what happen is your goods are concerned, you have sent the goods in a transporter. You have either prepared, not prepared, EWA bill, invoice, raised, not raised. There can be anything, and because of any of these your offenses, the goods are subject matter of the seizure along with the conveyance. Now in that case, the goods are belong to the consignor or consignee, as the case may be. The transporter is the one who is only in the business of providing transport service. So for him, he is just carrying the goods as a bailee for the time being, but otherwise his vehicle is the one which is involved. Now department will attach or rather seize both goods as well as conveyance. And if the consignor consignee doesn't come forward for release of goods, what will happen? The transporter truck is also been unnecessary. I'll not say unnecessary, but they will also held up and it will be subject matter of seizure. So transporter is an independent party. So this section 129 provides that if transporter want his truck to be released or his vehicle to be released from this, in spite the goods have not been released, then he can pay penalty up to 1 lakh rupees, and with that, once he makes the payment, then his truck or his vehicle will be released. The goods only will be thereafter detained. So this is a provision which is contained in section 129 is concerned. With this, now friends, we'll go to the next section, section 130, and that is dealing with the confiscation of the goods or the conveyance is concerned. Now this 130 section, that lists out some 5 scenarios where any person, again mark the word, it need not be the registered person or taxable person, any person, if he supplies any goods or service, as the case may be, in contravention of the provision of this act with an intent to evade the tax. Again, the words attached is intention has to be there to evade the tax, or does not account for that goods in the books on which he is liable to pay tax under this act. If it doesn't account for it, obviously thereafter it will not be accounted in the returns, etc. Then if he supplies any goods liable to tax under this act without having applied for registration, so he was liable and he has not taken registration, but he straight away supplied the goods, that is also violation. Or if he contravenes any of the provision of the act or rules, as the case may be, with the intent to evade the payment of taxes. And the last is concerned, if he uses any conveyance. So now the question comes is the uses any conveyance. So conveyance maybe belongs to transporter, but it has been used by the consignor or consignee, as the case may be, as a mean of transport for carriage of goods in contravention of the provision of this act. Here transporter is also being covered. Even the consignor or the consignee, they are also, because all of them have used the goods use the conveyance for the transporting the goods, or the rule that will be in contravention to act or rules, unless the owner of the conveyance, that is the transporter, if he proves that it was so used without his knowledge, that he was not aware, that rarely happens, but suppose he can prove with the facts of the case or connivance of the owner himself or his agent and the person in charge of the conveyance. I can give only one example. Many a time the lorries of the transporter are stolen, and the consignor transports his goods in that stolen lorry. Now in that case, if he transporter proves that my lorry was stolen, and correspondingly he can demonstrate that he has already lodged the complaint for that lost vehicle in the police station, etc., whatever, then in that case, even if that lorry or the vehicle contains the goods which are lorries used for transporting the goods in violation of the provision of act, he will not be a guilty. This offense is not committed by him, and section 130 will not be applicable. Of course, this is an example I have given. In real life situation, very few such transactions you will come across, but yes, these are the type of transaction. Otherwise, without knowledge of transporter, if nobody can transport the goods when the vehicle belongs to him, so it will be very difficult. Fact to fact wise, one has to look into it. Now in all these 5 scenarios, then all such goods or conveyance shall be liable for confiscation. In that case, what happens? Goods or conveyance or both, mind you, both of them will be liable for this thing, and he will be liable for penalty under 122. 122 is the very first section. In that they have used the word 120, that means all these sub clauses which are being provided under 122 will be invoked. Any of that, of course, in the show cause they will have to invoke these the provisions, relevant provision, but he is being made liable. So any person will be covered over here. If you really look all the penalties, many a times you will find that for same violation the penalties have been prescribed at more than one places. Yes, it is there is a overlapping in this, but that is maybe perhaps the abundant precautions to the extent government has notified. Only thing, as a professional or consultant, when you are handling the litigation, you ensure that the section which is invoked in the show cause notice is the one for which there is a violation from your side. The next is whenever confiscation happens under that 130 section which you are discussing, the officer who is adjudicating shall give to the owner of goods an opportunity, an option to pay an amount in lieu of confiscation. So the scenarios which we have just discussed, in that case, before the confiscation, the officer will give an option that pay this much amount. such fine. Mind well, the fine is concerned has to be decided by the officer. The limits have been prescribed in the statute, but that is the amount they have to decide. Now, then if such fine is being paid, then those goods and the conveyance will be released. Now, the law provides that the amount of fine which the officer can levy, or the amount he can recover by a fine, shall not exceed the market value of the goods. So if your goods confiscated is say 10 lakhs rupees, the fine amount cannot be more than 10 lakhs less the tax chargeable thereon. So 10 lakhs per, suppose 5% item is there, so it will be 50,000 minus, so it will be 9,50,000 kind of a thing will be amount maximum he can levy. Further, it proviso says that the aggregate of such fine and penalty leviable shall not be less than the penalty equal to 100% of tax payable. So it will not be less than this much. So penalty 100% of tax, in this case, our example, tax is only 50,000 because 5% of 10 lakhs. So minimum 50,000 should be there. It not be less than that. So upper cap and the lower cap has been provided for in this section. Provided further that where any such conveyance is used for carriage of goods or passenger on hire, the owner of the conveyance shall be given an option. So this is given specifically to the owner of conveyance to pay in lieu of the confiscation a fine which is equal to tax payable on the goods. So in our example, 50,000 is the tax payable. Then that is the amount of fine with the person who is the owner of the vehicle, that is transporter, will have to pay. This is section 130 is concerned. Well, friends, now the next provision 132 section, that is a punishment of a certain offences. The offences have been listed in 132 subclause 1, and there are quite a few in number. So whoever commits, now here the word is neither any person nor the taxable person or registered person. They have not used the word, they have used the word whoever. So even if the law you are not governed by, or you are not, rather I'll say you are not registered by, still you can be a party to it. Whoever commit or causes to commit, I'll say even we chartered accountant as a consultant are also being covered for these offences, which is provided under 132, provided we have committed these offences. So whoever commits or causes to commit and retain the benefit arising out of any of the following offences. You have to be very careful. The coverage of this particular section is very, very vast in this scenario. First of all, so you need not be supplier, but if you got some benefit out of this transaction, then you will be guilty and you will be levied with the penalty or punishment as the case may be in section 132. First is supplies goods or service or both without issuance of invoice in violation of this act with intent to evade the tax. For our better understanding, just only I am explaining. Of course, suppose Mr. A is concerned, is your client, okay, and A has not supplied the bill, is no material, but he has supplied the bill to B, and it is you were also instrumental in that, okay, as a consultant. So let me tell you why I'm telling you, because in that case you read the clause supplies goods, service or both without issuance of invoice in violation of this act. So here either you have supplied the goods, not issued the invoice, or you have issued the invoice and not supplied the goods. Both are covered, both the scenarios are covered. And if you have got some benefit out of it, you are a beneficiary of it, then you can also be punished. You can be liable for the punishment and the consequential penalty also. So that is what the intention has to evade the tax, obviously. The next is if you issue the invoice without supply of material, I think that I have discussed. Plus further it say it is wrong availment of ITC or utilization. Normally these are all fake bills, hawala bills as the case may be. So in that, ensure that if try to keep yourself away out of it. In any case, we are not supposed to, and it is as a the law doesn't provide, rather I mean to say one need to ensure that we follow the law and we support the government in administering the GST properly to that extent. So be careful here. Whoever commit is the something which is a very wide enough to cover a person other than a taxpayer. Then if he avails ITC using invoice or bill referred to in clause 2, or fraudulently avails ITC without any invoice, if you don't have invoice and still you are availing, That is also one of the scenario covered over here. If he collects any amount as tax but fails to pay the same to the government beyond, I know that in we are read in newspaper once the restaurant, some of the restaurant, they have collected not only tax, service charges, and they have written other taxes. Now there is no other taxes. I think there's an article on that. Now if that amount is collected, and if it is collected as a tax, I mean here tax is GST tax, then that is also a violation. And if we fail to deposit within a period of 3 months, whether tax is collected rightly or wrongly, as a trustee you need to deposit to the treasury of government. Then if we evade the tax or fraudulently obtain a refund, where such offences is not covered under clause A to D, the 141 we have just now discussed above 4. If you evade the tax or obtain refund fraudulently, but the cases are other than one which we have discussed above 4, then it is covered over here. The next is if he falsifies the financial record or substitute the records or produce the fake accounts or documents or any such fake information or false information, and with the intention to evade the tax, then that is also a scenario. If he obstruct or prevent an officer in discharge of his duties under this act, then that is also one of the violation in this. Acquire or possess of or in any way concern himself in transporting, removing, depositing, keeping, concealing, supplying, purchasing, or any other manner deal with any goods which he knows or has reason to believe are liable to be conveyed. This, I think, the same penalty we have seen in other section. Or in the case of a service, the 9th clause is talking about the service, the 8th one is about the goods. The last is if it tampers or with or destroy any material or evidence or a document which was relevant for any proceedings, then that is also a violation to that extent. The next is fails to supply any information which is required to be supplied under this act. So it is requirement under the statute, and if you fail to give the information, or unless with a reasonable belief that the burden of proving which shall be upon him that the information supplied by me is the true. That means even if you if you don't supply information is also one of the offense. If you supply information which is not correct but it is a false, right or wrong we are not talking, but the false, that means knowingly you know that the information is not correct and still you are supplying, then that is also offense under this section. The last is attempt to commit or abet the commission of any of the offense mentioned in clause A to A, K of this section. So all the four aforesaid clauses A to K and which we have discussed. Then if he commits or abet the commission of any of the offense mentioned in clause 2A, then also it's a violation. So in all this scenario, the penalty or the punishment has been prescribed. Forget about the financial penalty, it is imprisonment is also been prescribed. So what it says, the section provides that if there is a possibility of tax being evaded because of those offenses, or there may be erroneous refunds taken or claimed, or there may be wrong ITC availed because of that, and if the amount involved in that, you have to find out in which of the bracket you are falling into. If it is exceeds 5 crore rupees, or the second bracket 2 to 5 crore, and third is 1 crore to 2 crore. So anything below 1 crore is concerned, which is having a separate listing. But right now, in any of these three brackets, if the amount of tax or refund or ITC as the case may be, which you are wrongly taken or evaded with the intention to defraud the revenue, then you are liable for a fine. Yes, consequential fine, which is a penalties, and over and above there is a imprisonment. Imprisonment is based on the amount, so it is a maximum up to 5 years. The second 2 to 5 crore, it is 3 years, and 1 to 2 crore is a 1 year. So this is over and above fine. Mind well, it is not either of these two, it is both fine as well as imprisonment. Very, very harsh, so be careful on that part. Of course, it is a very substantial amount involved over here. It is may not be applicable to the small taxpayers. That is one part, because this is very harsh action, imprisonment. Now here most important is 1 minute. Yeah. Now here the punishment is concerned. It further says that if any person commits following offences. Now the falsifies or substitute financial records. See, for earlier 11 scenarios we have seen that there is an imprisonment up to a certain number of years based on the amount of tax, refund or ITC involved. Now beyond that, the section provide that if any person commits following offense like falsifies or substitute financial record or fake accounts document if he furnishes with the intention or obstruct prevent any officer in discharging duties or tampers with destroy the material evidence. Now here try to understand none of this is there is an intention to evade the tax, but there is no quantification. Actually speaking, it is obstructing, it's a procedural part. See, you can't give a wrong document, false document, fake document. You cannot destroy them or you cannot obstruct or prevent the officer. So this is where the amount is perhaps not involved. But if you do this act, then as the department can, the person becomes a guilty and they will be punishable with an imprisonment for a term up to 6 months. In earlier case, the volume or the amount was quantified from 1 crore to 5 crore or more, as the case may be. Here there is no question of amount, and the terms of imprisonment is up to 6 months or with fine or with both. So mind well, this section 132 for these three violations provide for either imprisonment or fine or with both. But in the earlier slide, it is both. Here in this case, you will have fine as well as imprisonment. This is a difference between these offenses are concerned. I hope it's clear to that extent. Now, section 132, it further provides that an offense mentioned in these sections are non-cognizable and bailable. Non-cognizable and bailable means you can go for an anticipatory bail from the jurisdictional courts are concerned. Now, but only thing is except for following. So all these offenses which we have seen in earlier slide, that imprisonment of 6 months, 1 year, 3 years or 5 years as the case may be, they are all non-cognizable and bailable, but there is an exception to that. And what is that exception? Where the amount exceeds 5 crore. So very first, where the duty amount or the refund or ITC amount which is sought to be evaded is above 5 crore rupees, then it is a non-bailable. That means you will be behind bar for the number of days, that is maximum period of 5 years being mentioned over there. So very, very important. So let me tell you that first of all, one should not advise the client for any of these offenses, but having these offenses have been done, you caution the client that there is no bail, but surely a jail. So that is being very, very clear. And secondly, the instances which are covered under clause A to D of section 1 herein above. So the amount should be above 5 crore and it should be on account of those 4 clauses which we have discussed. So ITC, refund, etc. That is there in 132 because it is up to A to L, but this is applicable only A to D. So E, F, G, H, other clauses, there is no this thing that is bailable, but only A to D clause violation and amount exceed 5 crore, both the condition fulfilled, then it is going to be a jail, not bailable. Every prosecution proceeding initiated require prior sanction of commissioner. Yes, that is there obviously in the statute and that is been provided in 132. Now, where any person convicted of an offense under this section is again convicted, that means say Mr. A is convicted once, say for maybe 6 months, 1 year, 3 year, 5 year as the case may be, and thereafter again second time is convicted for a second separate offense under same statute, then the duration of imprisonment will be 5 years. So that 6 months, 1 year, 3 year will not be applicable for second time the same person commits the offense. So imprisonment term will be now straight 5 years. So first time you have whichever bracket you are falling into, but second time it will be a straight 5 years. I hope it's clear on that. Now, like the duties, responsibilities the GST statute has some provision related to this offense penalty. The section 133 is the one which deal with these provisions. The sections are concerned about it how it is worded. I'm not reading the bare verbatim, but we are filing our returns. A lot of information we are putting in the portal related to your refunds, ITC, purchase, sale, etc., which are very sensitive and which are all secret information of every assessee. You have your login password, obviously, but departmental officer do have access to the same. That being a very business sensitive information, it is the utmost duty casted upon the officer to maintain the security and secrecy of the information which is available to them either on the portal or on a physical form. And those data are concerned should not be used for any other purpose other than a taxation or administration of the GST or any such purpose which is notified by the government from time to time. So secrecy has to be maintained. Now, if the officer willfully discloses such information or content by any other reason other than the reason of his duty, mind well, during the course of his duty, if he is sharing this information casted upon him under this act, then even to the departmental officer PO, proper officer is liable for the punishment with imprisonment for a term which can be extended up to 6 months or with a fine. Both can be levied. So like if your information is given to your competitor, your supplier, or any other parties for any purpose which is not as a part of his duty or in compliance to any provision of statute, then he will be found guilty and this action will be taken and he has to suffer from those penalties on the consequences. Further, any prosecution under this act section would be carried out with the prior sanction of the government in case of a prosecution of a government servant. So officer is a government servant, and if prosecution has to be done, it will be always with the prior permission, and in case of he is not a government servant, then with the sanction of the commissioner if he is other than government servant. So there are many portals related things if the access is there to other than employees for any reason, and if they commit this violation, then also they will be liable, of course, with the permission of the commissioner is concerned. We are toward the end, the last 1 or 2 slides. The section 137, and that is offense by companies. Many a times we know that in a company you have a secretary, managing director, chairman, professional director, so on and so forth. Okay, taxation head, etc. So who will be liable for the consequences for what? So here the section provided where an offense is committed by company, because everything is by and for company, then the section provides that every person or director or manager or secretary or any other officer, so coverage is very vast, but more, so say the offense is committed in 2022 and someone has joined the company in 2022 when the offense was detected, he will not be liable, obviously. So it is written here who at the time of commitment of offense was in charge and was responsible. So even first of all, he should be associated with the organization. Not only that, he should be involved into the area for where the crime or rather I mean to say offense have been committed, and he should be in charge or rather responsible to the company for conduct of the business of the company, as well as the company shall be deemed to be, so that officer as well as the company shall be guilty of offense and shall be liable to be proceeded against and punished accordingly. So we have to be very, very, very careful on that part of it. What is your role, what is your responsibility, and what is the area where the offense have occurred, and if you are responsible directly, indirectly, to that extent based on the conduct of the business, then you can be made party to it. Similarly, when it is in case of a partnership from HUF or LLPs or trusts are concerned, instead of director, it will be partner, karta, managing trustee as the case may be. shall be deemed to be guilty. So they will be the concerned parties or concerned. They have used the word managing trustees. There may be some trustees who may not be into the management, so they will be kept outside the purview in my case. That's what I mean to say. And secondly, HUF is concerned, there may be 5-10 co-partners members, but who is responsible is only Karta, not the other members, as per the section 137 is concerned. Further, if accused person proves, whosoever is accused, prove that he was in no way related to the offense, although offense was committed by the company, but he has no role to play, is not concerned, not a guilty, and he has exercised his all possible measure to prevent the commission of such offense, then he is not punishable under this section. So that is onus is upon him. It's fact-based and facts and the document and evidence-based. If you can justify, then you can come out of this. Before I conclude, there are certain one or two important. No tribunal being formed as on today for the GST. That's why the most of the matters are either at High Court level by way of writs or travel beyond that in Supreme Court. And other litigations are at only adjudication level or at first level. Those decisions have no precedential value. But there are few of the important judicial decisions in the erstwhile indirect tax provision or other statute. Predominantly in the excise and the service tax or customs. We have taken in this next 2-3 minutes before I wind up and keep the floor open for any questions, if any. We have seen the penalties. Mind well, first of all, let me tell you, penalty is not automatic. It is, the department has to allege it, and thereafter opportunity has to be given. And based on your submission, the officer has to take decision on the merits, and then he has to levy the penalty. So more important, the principle of natural justice also will be there. There is a mens rea is must. Now for that, some of the decision, one of the Supreme Court very old decision of 2007 in the case of Continental Foundation, and that was vis-a-vis excise. There was a provision under excise section 11A subclause 1, penalty was there for a suppression. Now, while interpreting what is suppression, the Honorable Apex Court has stated that, another observer stated that the word suppression is accompanied by very strong words such as fraud and collusion. So there should not be mere suppression, but there should be with the intent to defraud the revenue. There has to be presence of fraud or guilty mind or collusion. It has to be construed strictly, and mere omission to give the correct information is not suppression. So mind well, if you have not given information or if you have not given correct information, but you have no guilty mind and there is no deliberate act on your part to evade the payment of taxes, etc., then this decision of Continental Foundation in the excise regime of Honorable Supreme Court Continental Foundation will come to a great help. A very good decision. What is how to interpret suppression. The second is concerned, another decision is Honorable Supreme Court in the case of Universa Textile, and that is a 2013 decision. Duties is not equivalent to collusion. This is also vis-a-vis excise. If you are a defaulter in making payment of duty, I have stated during my presentation there is a difference between accident and murder. Maybe the result is same, but then consequence and punishment may not be the same. So here also it says that mere non-payment of duty is not equivalent to collusion or willful misstatement or suppression of the fact. The conclusion that mere non-payment of duty is equivalent to a willful misstatement or suppression is untenable. You might have seen many service tax or GST notices that they always there is allegation you are not paid this much tax, there is a suppression and you are liable for so and so penalty. So Honorable Supreme Court stated that it is not the case and that is not tenable. If that were to be the true, every non-payment is the suppression or liable for this harsh penalty. The Honorable Court says that we fail to understand which form of non-payment would amount to ordinary default, because that means there has to be two kind of default. Then construing mere non-payment as any of the three category contemplated by the provision would leave no situation for which a limitation there, because larger period can be invoked only in the case of mens rea or guilty mind or suppression. The 1 or 2 more minutes, that is about the SNS Engineering Delhi Tribunal decision is there, which is also very, very interesting. That is In the case of EWS, SS Engineering, for imposition of penalty under section 78, that is guilty mind suppression, there must be some positive evidence to deliberate misdeclaration of value. That means onus is up to the department to bring to the evidence to the courts. They have to produce and prove. Mere allegation doesn't work. There has to be documentary evidence or some act. Thereby, they should be able to prove that there is a guilty mind with the intent to evade the payment of taxes. Mere failure to pay tax is not a suppression. That is what this SS Engineering. One very good decision in service tax regime is that of Motor World, and that is the Honorable Karnataka High Court, Bangalore, and which is very important decision vis-a-vis penalty in the old regime section 76 and 78. For paucity of time, I will not able to take the entire this thing, but this decision say that the sine qua non for the authority to impose the penalty is concerned, yes, if there is absence of reasonable cause, fine penalty can be levied, but mere failure on the part of the appellant assessee to comply is not the one which can be treated as a guilty mind, and penalty cannot when there. So there has to be mens rea is at the end of the day is the igniting point to invoke the penalty is concerned. The last is Supreme Court in the case of a cosmic dye chemical. This is 2002 excise related decision. Here the observation of a court is misstatement or suppression of fact are concerned, they are clearly qualified by the word willful misstatement. So the word is willful misstatement is a preceding to the misstatement. That means it is a guilty mind and this is a criminal mind is involved with the intent to evade the tax is a suffix. So if both are present, then only the larger period can be invoked and the penalty can be levied. Well, friends, these were the few decisions which perhaps I think although vis-a-vis old statute, but they will be very relevant for you to defend your cases in the days to come for GST, because principles for levying the penalty, although a type of penalty may be different, but the principles on which the penalties can be levied rather based on this will bound to remain the same. These are the pillar decisions. That's why I thought of dealing with you. So thank you very much for giving me an opportunity. And if at all any questions are there, I'll be glad to answer this. Over to the organizers.
Mishra ji, can we have the questions, please?
I think forum is perhaps he might have logged out. Seems like just check up if anybody has. In the box, chat box, any question is there?
Mishra ji, aap ho?
Forum, you can have a chat box. If anything is there, you let me know. Otherwise,
Madam, chat box में भी आपको
Desai session is at.
So I'll just take questions one by one. So what is the consequence if the assessee was supposed to do e-invoicing from April but failed to do so till now?
Yeah, e-invoicing, correct. So first of all, this is a contravention because e-invoicing is a mandatory, that is provided in the statute. When we have dealt with 122, it provides, I may not be remembering the sub clauses, let me be pardoning that, but having issued the invoice is not correct. Invoice has to be in compliance to the statute. The statutory requirement is there to generate IRAN and the e-invoicing. That is a crystal clear violation. Of course, only one grace is available to you is you have paid the taxes, perhaps you have booked the same in the books of account. So you can argue that it's a procedural violation. That's one part of it. Of course, let me tell you honestly, getting a decision in a favor for waiver of penalty at the adjudication level or maybe at first appeal level is a big challenge and maybe very, very difficult is my this thing. But in the initial days of e-invoicing, it is just applicable to you in April. And for initial first few days, it was missed out for whatever reason. It's a good case to argue, but be sure you will be going to the tribunal and you will get a waiver if the taxes, etc. have been paid. That is for sure. But of course, yes, it's a violation.
So please describe the nature of legal recourse available or legal proceedings to be followed after receipt of show cause, particularly when the tribunal benches are still not functional.
Forum, I think I have no problem, but I don't want to encroach on the other speaker because this is already dealt with by the others. And see, I think litigation in absence of tribunal, Jatin Arjai is the one who is going to take it on 11th of June on the same thing, and he is going to deal with tribunal is not function. So I don't mind replying, but I don't want to, overboard to that extent.
So I think that's it about the questions. There are hardly one or two more questions. So since it is already, we are running short of time, I think we can take them up offline.
No problem. Thank you, ma'am.
So, sir, I have been allotted the noble task of offering you a very well-deserved vote of thanks. So, I would like to say that there are a lot many sections in the chapter 19, which is offences and penalties, which are usually not known to us or are not dealt with us by regularly. And we as practitioners must have a thorough knowledge of those sections. So I'm sure all the participants would agree that Rajiv sir has done a very good justice to the chapter by giving us a very detailed explanation with examples for each and every section involved in that chapter. Rajiv sir, I on behalf of WIRC of ICAI offer a very hearty vote of thanks to you for taking out time from a very busy schedule and carrying out this wonderful session. Thank you so much. We're always grateful to you.
Yeah, thank you, Forum, for kind word. Thank you to the organizer for giving opportunity. Thank you very much. Abhay, I would love to listen, but I will listen your recorded ones. My apology due to other commitment. I wish you all the best. And sorry if I encroach your time. Thank you.
So, ladies and gentlemen, let's move to the second session for today. Second session is going to be taken by none other than CA Abhay Desai. I am sure he doesn't require any formal introduction, but just for the sake of it. So, Abhay Desai is All India rank holder at CA examinations. He is a lawyer as well as a DSA qualified. He has authored books on Sabka Vishwas Dispute Resolution Scheme 2019, which is published by the CTC. He has authored ICAI's publication on Guide to GST Audits and Annual Return. He has also authored the book Get Ready for GST. He has been co-opted as member of the Indirect Taxes Committee of the ICAI. Currently, he is handling consultation, advisory, and litigation up to the Supreme Court of India. He has addressed more than 500 seminars on indirect taxation till date. He has made representation to the Finance Minister of India as well as Deputy Finance Minister of India on various issues under GST. He has presented papers at various locations across India, including Delhi, Bangalore, Ahmedabad, Vadodara, and the list is long. He has published more than 300 articles, and the articles are regularly published in GST Law Times by Syntax, GST Journal by Taxman, Tax Guru, GST Journal by the Bar Association, and many more. He has been a winner of all Gujarat allocation competition held by the Bar Association. He is a brain trustee in all Gujarat seminar by the Bar Association. He has also written a treatise on recovery of attachment proceedings under GVAT law, and it has been published in the International Research Journal of the Management and Commerce, published by the Associated Asia Research Foundation. After hearing the formal introduction, I'm sure all the participants are excited. So, Abhay sir, over to you. Thank you so much.
Yeah, a very warm good evening. First and foremost, I'm grateful to Gautam ji, the Regional Council member of WIRC of ICAI, for allowing me to share some of my thoughts on the topic. To my fellow co-speaker, Rajiv sir, for an excellent exposition on the topic of penalty. Forum ji for a kind introduction, and my fellow professionals. It is indeed a pleasure, and in fact, I am delighted to be with you virtually to discuss certain issues on the topic related to advance ruling. In fact, if you see this entire litigation series, this is a unique topic. It stands out from the rest for the reason that this is a topic where the litigation is invited by the taxpayer himself rather than other topics where department initiates certain actions and the taxpayer is compelled to get into a litigation to get into the resolution of a dispute. Advance ruling is a topic or a mechanism where in fact the taxpayer is voluntarily going before the authorities with an open invitation to get into a dispute, and then looking at ways and means of resolving the disputes, ways and means of tackling the disputes. This topic is also unique for the second reason that in the context of the given topic, that the taxpayer who is approaching the advanced ruling authorities for resolving the disputes certainly comes back not with a happy face in large number of matters. So not only gets into a dispute for his own case, but also gets into a situation where the other players in the industry or the trade at large also is made to suffer because of those rulings, because those rulings are read by the officers of the department, and although they are not binding in law to the other applicants, to the other taxpayers, but as we see, the reality is that the officers consider these rulings as having a good amount of value, and therefore is used at times against the other taxpayers. At times even we have seen certain harsh actions taken by the officers based on the reading of such rulings over other applicants, and therefore it becomes very important to understand the topic and understand how one, if one has gone into this forum, how does one really tackle the disputes. So let us start the topic. The four important areas we will focus today in the context of the topic. One would be the history of advanced ruling, how it has evolved starting from the income tax days till now. We look at the purpose of the rulings, purpose of the setting up of the authority, whether that purpose stands fulfilled or whether that purpose stands in fact defeated with what has already happened in GST. Then we look at the legal provisions concerning the topic, and last and most important are the issues that if someone has got into the before the authority, then how does really one resolve certain issues that one would likely face with those authorities. So quickly, history, if you see, basically when our country got liberalized in 1991, in a sense that we invited foreign investors, we invited foreign money to boost the investment in our economy. So at that point in time, it was thought under the context of income tax that the foreigners are usually very jittery about tax disputes, and therefore they want a kind of a comfort, a kind of a certainty before getting into India, making a huge investment in India, and then getting into a dispute with the tax authorities over the amount of tax to be paid over the income that they may derive out of that investment. So to create a certainty in the minds of the foreign investors, to create an environment of trust, the authority of advanced ruling was first visualized and constituted under the income tax law in 1993. When it was constituted, it was a quasi-judicial authority where the president, the presiding officer of that authority was the retired judge of the apex court. The rulings were binding in nature, and given the constitution of the authority and given the fact that the authority was manned by judicial persons, the rulings that were rendered were largely impartial, balanced, considering the true provisions of law, considering the subtle propositions of law, and hence it more or less achieved the purpose of creating an environment of certainty and trust in the minds of the foreign investors. So the government thought that why not we replicate the same idea in the context of indirect taxation. So in 1999, a similar authority was set up under the customs and excise laws, having a similar setup where it was manned by the persons from judiciary. Service tax was introduced in 94. So by 2003, even under service tax, a lot of foreigners wanted clarity, before getting into investment in our country, wanted certain sense of certainty. So in 2003, similar authority was set up for deciding the service tax matters. And then we come to 2017, where, as we understand in GST, also an authority has been created, wherein a person can approach the authority in getting a ruling on the issues which are posed before the given authority. Somewhere from 2017 onwards, a regressive trend has started, and that is what I want to highlight through this slide. If we see first what happened under the customs law in 2018, as against the initial constitution where the retired judges of the Supreme Court were delivering the rulings, they were replaced by the revenue officers, that is the commissioners and the principal commissioners, who are now considered and who are now given the authority and replace the judges to deliver the rulings. In 2019, because of conflict in certain GST rulings that were coming out from across India, so the government thought that let us constitute the National Appellate Authority for Advanced Ruling. We'll deal with this topic separately when we go to that slide. But this is what happened in 2019. Although that authority, the provisions have been created in law, but that authority is yet to see the light of day. Those provisions are yet to be enforced. Having said that, in 2021, in fact, under the customs, against the advance ruling, if the applicant wanted to file an appeal against those rulings, there was an appellate authority which was constituted under the customs law that was abolished in 2021 by virtue of the Tribunals Reforms Act. Under the income tax also, a significant change happened where the entire advance ruling authority itself was scrapped, and a board of advance ruling was constituted, which again consisted only of the revenue members, that is the members from the executive, from the income tax department. And second, those rulings were now considered as not binding, as opposed to the earlier setup where the rulings were binding as far as the applicants and the officers are concerned. In 2022, that is this year, in the change under the customs law is that even if you have got a ruling, earlier the ruling had an unexpired lifespan. So unless the law changed, unless the facts changed, those rulings were binding. Now what the law says under the customs advance ruling mechanism is that the rulings will have only validity of 3 years. So at the end of third year, the applicant needs to again go back to the advance ruling authorities, again seek a ruling on the same issue which already stood decided by way of an earlier order. And it is quite possible that at the second visit, the authorities may deviate, may take a view that may be not in line with the view taken in the first set of proceedings. So as you can see, the context from history that we have just discussed, that as opposed to the constitution of the advance ruling authority, which was manned by the persons from judiciary, now under all the tax laws, that is in direct tax or indirect tax, the authorities are manned by the officers from the department only. And second, as we see, the quality of the rulings have deteriorated as opposed to the rulings delivered by the members from judiciary. Certainly the rulings that have been delivered post 2017 by the members of the revenue itself, the quality have been greatly diluted. So this is the trend. In fact, this trend is quite opposite to what India committed under the WTO, under the Bali Agreement, where in 2017 India agreed as part of the WTO framework that India will be a party to setting up of an impartial advance ruling authorities across various tax laws in India, that includes direct and indirect tax, so as to give a comfort to the taxpayers in terms of resolving the disputes on day one itself, rather than getting into the business activity and then post facto getting the department auditing the records, the department exercising their other powers, identifying certain and alleging certain non-payments, certain erroneous claims, and then creating a dispute after already the transactions have been undertaken. So to avoid that situation, even at WTO, there is a strong commitment across the board that advance ruling authorities should be set up. It should be judicially made, and enough power should be given to the given authorities to really achieve the purpose for which they have been set out. But as we see in India, the trend is reversing. In fact, the authorities are now manned by revenue officers and also not having significant powers as compared to what was the case in the earlier regime. So having said that, let us look at more particularly in the context of GST what has happened. So in GST also, in fact, the courts, if you see the decision in the case of Khandelwal extractions, the court has in fact examined the provisions of the advance ruling mechanism under GST law, and they have said that the purpose is to really nip the litigation in the bud. This is a purpose is to avoid the possible disputes, and it is with that orientation, with that mindset that this authority has been constituted. But now really, how has it played out? Really, has it played out in terms of achieving the object for which this authority has been set up? The answer will be revealed in the next slide. As you can see, this is a statistical analysis of what has happened till date. So roughly around 1455 advance ruling orders have been pronounced by various advance ruling authorities of various states. Out of this, 414 have been pronounced in favor of the applicant, and therefore we can see the ratio that only 28% of the applicants have been successful before the authorities. So that roughly says that if 4 persons apply the authority, only one will be lucky enough to get a ruling in his favor. 3 would be unlucky because they would get a ruling against them. At the appellate stage, because we have also an appellate authority of advance rulings where the advance rulings can be challenged. There, if you see again, more or less the trend remains the same, that out of the 246 orders that have been pronounced, only 47 are in favor of the appellant and the rest are all against the appellant. So here again also we see that only 19% of the appellants have succeeded before the appellate authority of advance rulings. As compared to that, if you look at what happens at the state level, where in the earlier regime the disputes related to excise and service tax were dealt with, it was a judicial forum, so we can see a stark contrast where if we see the success rate of the department before the state was merely 12%, whereas their petition rate was 20%. So you can see even in the petitions where the departments were as an appellant approaching the state, they were not able to succeed in all their cases. Their success rate is below even their petition filing rate. So literally the actual success rate was well below the percentage of 10% as compared to the appellant who were succeeding at the state in excess of where they are having a success ratio in exceeding 90%. So this indicates that the constitution of the advance ruling has some fundamental defects. The constitution of the advance ruling and the mindset with which the advance ruling has delivered their verdicts requires an overhaul, or requires, in my humble opinion, in fact, the scrapping of the ruling authority itself, given the way they have been functioning till date. Now, why I am saying that? Now, there are two large reasons why I am saying this. One is, which are very evident, anyone can see that if one closely examines the rulings which have been rendered till date, that the same ruling authority have been giving conflicting rulings, divergent rulings on the same issue, on the same subject matter. We are seeing this in the context of cross charge and ISD, where the ruling authority of the same state, in this particular situation Maharashtra, in one case rules that in a certain fact pattern, what is required to be done is a cross charge. In the same fact pattern, in case of another applicant, the ruling authorities come out with a view saying that no, cross charge is not to be done. What is required to be done is ISD. And in the same fact pattern, third ruling comes which says no, not only cross charge but even ISD are to be done simultaneously. So we can see on the same we can see the same authority rendering conflicting opinions. This we saw different states. Certain the persons are intermediaries. Certain authorities have taken a view that those persons are not intermediaries. In fact, there is a conflict as regard to which tax is to be paid by the intermediaries. The certain ruling authorities have taken a view that it is a intrastate supply, and certain ruling authorities have taken a view that it is an interstate supply. In context of mining rights also, we see the same story repeated, where we have conflicting rulings. One says the the rate of tax should be the rate of the goods which will be mined from that particular mines for which the rights have been granted. And some rulings are taking a view that no, these rights are independent, separate, and therefore it will carry a general rate, or it will attract the general rate of GST of 18%. And the list is long. So this indicates that as the purpose of setting up this ruling authority is clearly defeated, because if this is a situation, and if, let us say, anyone else who is not a party to those ruling, now if he wants to take any support from this ruling, then he will be totally lost, because he will have no way to really see which ruling is authoritative ruling or which ruling really can be relied upon, and on that basis he can take a position which largely could be expected to be agreed by the department. That kind of comfort is nowhere there. In fact, whatever position that you take, if you are going to take it only on relying on an advance ruling, then those positions may not withstand merely on the ground that it is taken based on a certain advance ruling, because we are seeing a conflict between the rulings itself. Second reason that is visible, again, if we read the rulings, is that the rulings, the positions that are canvassed by the applicants are largely disregarded on a perfunctory reasonings. We can see a pro-revenue bias visible. Certain Supreme Court decisions are canvassed by the applicants to say that the ruling should be delivered in their favor, but those decisions are ignored. They are ignored merely on the ground that they are of the pre-GST era and therefore no longer binding under the GST law. Whereas if we see, the law largely has been borrowed from the earlier regime. In fact, in large number of disputes, the provisions are verbatim, as was the case in the earlier regime. And if in that set of circumstances, if certain court, High Court or a Supreme Court, has delivered a verdict interpreting that set of provisions, those should have been relied on by the advance ruling authorities to give their findings. But we see that is not the case. Their own subjective notions of what GST is, how it should be read, comes into play, and on that basis the rulings are given against the applicant. So these are two large reasons we see. On that basis, we can conclude that the purpose is totally missed. In fact, the purpose with which this authority was created, that is to resolve the dispute, is eventually result into a totally opposite situation, where this authority is now inventing disputes, creating disputes, putting at risk not only the applicant but also the entire industry, because those rulings, those disputes, those orders are read by the officers, and those are used by them to initiate proceedings against the other taxpayers. So on the face of it, I would say that one should not approach these authorities at all. It is not advisable. One should have, if one is doing it, then that person is doing it not only at his own risk but at the risk of the industry, because he is putting all the trade into conflict. So having said that, this is the practical side, which I thought is very important. I should have ideally put this at the end of the presentation, but I thought this is a significant point, that if anyone from the audience who is listening today has even an idea of approaching this authority, I believe this, what we discussed till now, would indicate that one should not have those ideas. One should rather interpret the law based on the settled principles, take a position based on that settled propositions, and get into litigation if at all, if it is initiated by the department through their other proceedings in terms of audits or in terms of summons or in terms of search or whatever is the case, not get into a proactive mode of going before the authorities and getting an answer, because largely, as we have seen, the answer would be negative, and that will start the dispute right away. So having said that, let us understand the legal provisions related to the advance ruling mechanism, and then we look at the issues. So chapter 17 of the CGST Act deals with the provisions. It starts from section 95 and it goes up to 106. as far as the rules are concerned, the procedural aspects on the topic are contained in the rules. It starts from Rule 103. That is Chapter 12 of the CGST rules deal with this procedural aspects of the topic. It starts from Rule 103 and it goes up to Rule 107, capital A. Now, what is the meaning of the term advance ruling? It has been given under Section 95 Clause A to say that this is basically a decision which is rendered by the authority or the appellate authority or the National Appellate Authority, which, as we discussed, is yet to be constituted, on the matters or the questions that are put before the given authorities by the applicants by way of filing the application for advance rulings. So this in a nutshell is a ruling, the order which is passed by either the authority, that is the advance ruling authority, or the appellate authority. If the applicant or the department is going to challenge those orders, and the findings of the appellate authority in terms of their order would also be considered as an advance ruling, so that will also have a binding force that we will see later on between that particular applicant and the officer or the jurisdictional officer to that particular applicant. Now, how the authority shall be constituted? It shall be appointed. It shall be. It is basically nothing but it is manned by the officers of the department itself. The officer should be of a rank not lower than that of a joint commissioner. The rest, all government has been given the power to constitute the authority, by only caveat that the officer who will be appointed as the advance ruling authority or an appellate authority should be of a rank of joint commissioner or of a superior rank. Now, who can file the application before that authority? Section 97 deals with this issue. It says an applicant who is desiring of obtaining an advance ruling should file an application, can file an application. Who is an applicant? Clause C of Section 95 defines that as a person who is registered or desirous of obtaining registration. So not only a person who is already registered under GST can file the application, but even a person who is desiring of obtaining the registration can file an application. This is for the reason that one of the questions that can be put before the authority is whether that person requires the registration or not. So even a person who is today contemplating that he is not required to be registered and therefore wants to approach the authorities to get their ruling on that particular issue can also approach that authority. No need to register today. There is a procedural mechanism created on the portal where he can obtain a temporary registration only for the purpose of filing an application for advance ruling and getting the ruling. So it is not required that the person who is approaching the authority should be a registered person. Even a person who is an unregistered person but is desirous of obtaining the registration, or is having an issue related to whether he should obtain a registration or not, even that person is eligible to seek an advance ruling. Now, what are the matters on which a ruling can be sought? So Section 97(2) deals with those aspects. So from Clause A to G are the matters on which a person can seek an advance ruling. Clause A deals with the classification of goods or services. On the issue of classification, he can seek a ruling. On the issue of whether a particular notification is applicable to the facts of that particular case, even on that question, a ruling can be sought. A ruling can be sought even on the question of determination of time and value of supply of goods or services. So the question related to the time of supply, as when that person is liable to pay the tax, or the value of supply on which the tax is to be computed. Even those questions can be put before the authorities. Clause D deals with the question related to admissibility of input tax credits, where he has paid the tax or he is deemed to have paid the tax. In that situation also, he can seek a ruling as to whether he is admissible for the credit or not. Clause E, it's a very widely worded. It says the applicant can approach the authority on the issue of determination of whether he is liable to pay the tax on any goods or services or not. So it's a very widely worded clause, because when we see the question of determination of liability, so that will encompass all the facets which are possible under the GST law, be it classification, be it levy, be it valuation, be it the rate of tax, be it application of a certain notification. So all those issues can be put before the authority under the clause E. Clause F deals with whether the applicant should be registered. So the question related to registration also can be sought with the authorities. And last is where any particular thing has been done by the applicant. If he has an issue whether that results into a supply or not, so even in that context he can get a ruling. Before the appellate authority of advance ruling, what can be questioned is basically the order of the advance ruling authority, because as an applicant, if you are challenging the order before the appellate authority on a ruling that has already been delivered in your manner, in your case, or vis-a-vis a department officer challenging that ruling, in either situation, what is the subject matter before the appellate authority is to ultimately decide whether the issue or the matter on which the advance ruling was sought, what we discussed above under 97(2), whether the ruling given by that authority is in accordance with law or not. So this is largely the matters on which the rulings can be sought. What is the procedure? So application has to be filed on the portal. There is a form designed ARA01 through which you can make an application. A fee is to be paid. 10,000 rupees is the aggregate fee and 5,000 under CGST and SGST each. The application should be digitally signed or e-signed by the representative. Also, manual filing is permitted. So we have rule 107 capital A, which says that if someone wants to manually file the application, even that is permitted as far as the advance rulings are concerned. Now, once a application is filed, what should be the procedure before the authority? So basically, as soon as they get an application, they will forward a copy to the concerned officer to whom that particular taxpayer has a jurisdiction. They will also seek any necessary information from that officer pertaining to the questions which are posed before the authority. After that, they will first have a hearing to decide whether they want to admit the application or they want to reject the application. That is, at a threshold stage, they will examine whether that application merits acceptance or not. If they find that that application does not merit an acceptance, then in that situation, the application would be rejected. Reasons for such rejection would be given to that particular applicant. Now, which is a situation where the authorities may not admit the application? One situation which is visible in section 98 itself is where the question on which the application has been filed, that question is already pending for that particular applicant under any proceedings under the law, or it has already been decided under any proceedings under the law. So take a situation where, let us say, a search has happened, and during that search on a certain issue, proceedings have been initiated to gather information to examine whether there is any liability of that particular taxpayer on that issue. Now, once that has already happened, once a panchnama has been drawn, once the proceedings have been initiated, in that situation, that particular applicant is now prohibited from approaching the advance ruling authorities to get a ruling on that particular issue. Now, the reasoning here is very clear that once certain authority has already seized the matter, then it is that authority who has to then deal with that matter entirely and get it to a logical conclusion. Advance ruling authority then cannot step in and give a finding or give a ruling as far as that particular issue is concerned. Of course, that applicant is not prevented from approaching the authority for any other issue for which no proceedings have been initiated. But for the issues on which proceedings have already been initiated, it may not have been concluded. That way, the conclusion is not required. Mere initiation of the proceeding itself is sufficient for the advance ruling authority to reject the application of that particular applicant. Now, after this threshold is crossed, that is, after the ruling is admitted, then the pronouncement will happen. They will call for another hearing if required. They will gather whatever materials that they find is necessary for delivering the rulings, and then they will pronounce the ruling within 90 days. That is the statutory framework given in law, that from the date of receipt of the application, within 90 days, the authority is required to pronounce their rulings. As we see in reality, in large number of cases, the rulings have not been pronounced within this statutory time frame of 90 days from the date of receipt of the application. Certainly, as we'll see later on, that can be taken as one of the ground to challenge the rulings. Once the ruling is pronounced, a copy of that ruling is required to be given to all the interested parties, that is the applicant, the jurisdictional officer, for the purpose of their record. Now, if there is a difference between the authorities, because as we understand, before an advanced ruling authorities, it is manned by two officers, one from the state and another from the center. And if there is a difference of opinion between the two officers which are part of that authority, in that situation, what will happen? Section 98(5) says that in that situation, they will merely state the point on which they are differing, and then they will refer the matter to the appellate authority of advanced ruling, who will then hear the parties and then give their decision. So when there is a difference of opinion, there is no third person who will resolve the difference. The application itself will then be thrown out from the jurisdiction of the advanced ruling authority. It will be tossed to the jurisdiction of the appellate authority of advanced ruling, and then appellate authority of advanced ruling will have to then take a decision as regards the issue that was posed before the authority. So this will happen if there is a difference between the authorities. Let us take a situation where already a ruling has been pronounced, and in that situation, what can happen further? So an appeal can be preferred. So an applicant can prefer an appeal. Certainly an applicant will prefer an appeal only if the ruling is adverse. Vis-a-vis that, even the concerned officer, that is the jurisdictional officer, can also prefer an appeal if that officer finds that the ruling is adverse to the department and he has a ground to appeal. In that situation, even he has been given the right to file an appeal. A time limit has been prescribed in law that appeal has to be filed within a period of 30 days from the date on which the ruling was communicated. Further extended time of 30 days can also be sought from the appellate authority if the applicant or that officer are having sufficient cause which can demonstrate that why they were not able to file the appeal within the normal period of 30 days. In that situation, if that cause appeals to the appellate authority, they will grant the extended time and they will admit the appeal, even if it is filed beyond 30 days, but within a period of final 60 days from the date of the communication of that order. So in that situation, if let us say you are filing an appeal after the period of 30 days is over, then along with the appeal, you also need to submit a condonation of delay application indicating the cause which prevented you from filing the appeal within the normal period of 30 days. How do you file the appeal? So there is a manner prescribed in the rule. That is again a procedural aspect. We'll see in the next slide how that appeal is to be filed. So again, that is on the portal. That is in form AS 02 that you need to file an appeal. Appeal fees as against 10,000 which was to be paid before the advanced ruling authority, before the appellate authority, you need to pay 20,000. There are no fees payable if the appeal is preferred by the department, that is the jurisdictional officer. Again here, manual filing is permitted. Same procedural rule applies. In fact, this manual filing and processing applies across all the procedural aspects related to the topic that we are discussing. So even an order which is pronounced, legally it is required to be put on the portal, but because of 107A, it can be also delivered manually to that concerned applicant or that concerned officer. So the manual filing and the manual processing of the application before the authority or the appellate authority applies across all the proceedings related to the topic. This was done initially when on the portal there were certain issues where people were not able to file the applications. But even as on date, even in absence of portal issues, still that rule continues. So as long as this rule will continue, the option of undertaking manual filing or manual processing of the applications or appeals would still be valid. Now, order of the appellate authority. So appellate authority will, after the appeals are filed, they will call for a hearing and they will pass an appeal order. Here again, there is a statutory time frame of 90 days from the date of filing within which the order is to be passed. Here again, there can be a issue where two members, the one appellate member from the state and another appellate member from the center, can have a difference of opinion, can have a divergent view on that particular issue or particular points. In that situation, what will happen? Now here we don't have any authority beyond the appellate authority of advanced ruling to whom they can refer the matter. So the law conveniently says that in that situation, no ruling will be given. In fact, the application would be returned back to that particular applicant. So this is in fact ironical that if the appellate authorities have a difference of opinion, then in that situation, rather than resolving that difference, they will merely give the they will not give the ruling, and they will in fact return the application back to that applicant. Now, rectification, there is a provision under section 103 that if, let us say, someone finds an error which is apparent on the record, either the authority may themselves notice the error, or it is brought to their notice either by the applicant or by the officer. In any of the situation, they have been given the power to rectify the order. Both rectification can be done not only by the original authority of advance ruling, that is the first authority, it can also be done by the appellate authority of advance ruling. There's a time frame within which this rectification has to be done. It is to be done within a period of 6 months from the date of the order. So there is no time frame for filing the rectification application, but there is a time frame for passing a rectification order. So that naturally means that the application has to be filed within this period of 6 months. Otherwise, that authority will anyway not be able to rectify the ruling. Of course, if the rectification results into further adverse position of the applicant, then without hearing that applicant, the rectification cannot be done. Now, what is the binding nature of this ruling? 103 deals with that aspect. They say that whatever rulings are pronounced either by the authority of advance ruling or by the appellate authority, they shall bind two parties in the context. One is the applicant who sought the ruling, and another is the concerned officer, the jurisdictional officer to that particular applicant. So these are the only two parties to which the ruling has a binding effect. It does not have a binding effect on any other party or any other authority. Now, those rulings are binding even between these two parties unless there is a change in law, facts, or circumstances. So if there is a change in law, if let us say there is some retrospective amendment to the law vis-a-vis the issue on which the ruling have been given, in that situation, the ruling would not remain binding, even qua the applicants and the officer. There is a change in facts, so there is a factual change. The fact pattern on which the ruling was sought and the actual facts that transpires could be different. In that situation also, the rulings would not be binding. Last is circumstances. It's a very wide word that they have used in the statute. So by circumstances, I would say that we have seen in the past certain situations where after the rulings have been delivered, the board have stepped in, that is the CBIC, and they have issued certain clarifications, certain instructions on that particular issue to quell the industry, to quell the adverse implications that could have been drawn by the other officers of the department on that particular ruling. So to avoid that kind of situation, board has stepped in the past, largely in a situation where the adverse rulings have been reported in the media. For example, there was a ruling reported in the media where they say that the payment made to the directors would be liable to tax under reverse charge mechanism, that is even the executive directors. In that context, the rulings were given, and then the board stepped in, issued a circular clarifying that as long as there is an employer-employee relationship, that would not be considered as a supply, and therefore it would not be liable to tax. Then we had a similar context in the case of duty-free shops at the airports, international airports. In that situation also, we had certain rulings, and then the board stepped in, issued a circular to kind of quell the fear that was created by virtue of those few adverse rulings. So that I would consider these as circumstances where circumstances change post the rulings have been delivered, and therefore that can also be the ground for the concerned applicants to say that whatever rulings were delivered would remain no longer binding, because the circumstances under which they were delivered and the circumstances now have changed, and therefore it has lost the binding effect. So these are the three situations where the rulings, even within the two interested parties, would not be binding. That is, if there is a change in law, change in fact, or change in circumstances. Now, there Either there can be situations where the rulings could be declared void. Section 104 deals with those situations where they say that if the rulings were obtained by way of a fraud or by suppressing some material fact or by misrepresenting the fact, then in that situation the rulings that have been pronounced would be declared as void. It would be void ab initio. It would not have any binding effect, not only post declaring the ruling as void, but even for the past period, that is from the date on which the ruling was, that is from the date on which the order was passed. The law also takes care of a situation where they say that if the ruling is declared void, then the entire period from the date of the ruling till the date on which it is declared as void would be excluded for the purpose of computing the limitation period for the department under 73 or 74 in terms of issuing the show cause notice to recover any dues based on that issue, or to adjudicate those show cause notices. So in a sense, let us say if someone obtains a ruling by fraud, today he obtains a ruling, after 2 years the authority declares that that ruling is void because it was obtained by way of fraud. In that situation, the entire period of 2 years would be excluded for the purpose of calculating the limitation under 73. That is a limitation of 3 years for the purpose of department to pass an order to recover any dues from that particular applicant, or under 74 where there were larger limitation period of 5 years. So for calculating those time limits, this entire period of 2 years would be excluded, and based on that the time limit would be calculated. This is again logical for the reason that for these 2 years everyone thought that the ruling is binding, and therefore department could not take any adverse action against that applicant. It is only once it is found that that ruling was obtained by fraud, and since now that ruling has been declared as void, this 2-year period where the department was under the impression that the ruling was obtained on genuine facts, that impression has now been thrown out, and that is not because of fault of the department, and therefore the department gets that 5-year period or 3-year period under 74 or 73 as the case may be, by excluding this time limit of 2 years in our example. So again, this is something which is coming from 104. 105 deals with the powers of the authority as well as the appellate authority. They say that they have the powers which is similar to the powers of which is akin rather to the power of a civil court under the Civil Procedure Code. So they have a power to discover and inspect any material which is required for the purpose of delivering the ruling. They have a power to enforce the attendance of any person that they may require and examine that person on oath. They also have a power to issue commissions or compelling production of books of accounts or any other records that they may consider necessary for the purpose of either pronouncing the ruling, or as in the case of an appellate authority, in deciding the appeal that is pending before the said authority. 106 deals with the procedure of the appellate authority. So they have been given the power to regulate their own procedure. So subject to whatever caveats that are there in law, what we already saw, subject to those caveats, they have their freedom to regulate their own procedure. Now we deal with the topic of National Appellate Authority for Advance Ruling. Now, why this was required? If you see 2019 GST Council meeting minutes, you will find that the council recognized the fact that divergent rulings are coming across India. In fact, in certain situations for the same appellant, there were divergent rulings that were coming from various authorities of different states. Therefore, they felt that there is a requirement to have a National Appellate Authority, so that at least that conflict, the divergence can be avoided. So with that objective, they brought these provisions in law. Section 101A, B and C were inserted, but unfortunately those provisions are yet to be notified. They are yet to be enforced. Till date, this authority is only on paper. In reality, this authority is yet to be constituted. Having said that, let us examine 3 important aspects of that authority, which in my opinion would tell you that even after constitution of this National Appellate Authority, it would not be that it would not achieve the purpose with which the authority has been set up. Why I am saying that? First is, the constitution of the National Appellate Authority would be a judicious constitution, so that is a welcome proposition. It will be manned. The president of the National Appellate Authority would be a retired Supreme Court judge. Even the members of this authority would be appointed in consultation with the Chief Justice of India. Therefore, to that extent, I would say this is a welcome move that this authority would have a judicious composition. But having said that, apart from this, there are no other aspects of this National Appellate Authority which are welcoming. Why I'm saying that? It is because it has a very restricted application. Only a person who has got a conflicting ruling in his own case. So let us say there is a legal entity who has more than one registration. So they have applied for advanced rulings under both the registrations that they are having. In the first application by, let us say, branch A, they get an adverse ruling. Another application made by branch B having a separate registration, they get a favorable ruling. Now they are in a flux what to consider, whether first ruling is binding, second ruling is binding, whether first ruling is binding to state A where branch A is located and second ruling is binding to state B where branch B is located. Now in this situation, as far as IGST is concerned, which ruling will have a precedence because it's an integrated tax which will be payable for interstate supplies made from branch A as well as branch B. So to resolve that issue, only that person can apply the authority, the appellate authority who has got the rulings for his own branches which are in conflict. So number one, this authority is not the original authority. One cannot straight away apply to this authority. One has to first go to the state authorities, the local original authorities of advanced rulings. One has to file more than one application through different registrations that legal entity is holding. And if one gets a conflicting ruling, if one gets adverse rulings in both the states, then this authority cannot be approached. Only if one gets a conflicting ruling in both the states, only in that situation that legal entity will have the right to approach to this National Appellate Authority. Now with this understanding, all of you would have guessed that this will become a meaningless authority for the simple reason that to get a conflicting ruling is rare for the same legal entity, and therefore a legal entity who gets two conflicting ruling, two adverse rulings from the two states where they are registered would not be eligible. So the entity who would be eligible would be only those entities who have one favor, because conflict will arise only one is favorable, one is adverse. As we saw earlier, getting a favorable ruling, there is a 1 out of 4 chance. So getting a ruling from one state which is favorable and for the same legal entity in the same set of facts for the same issue, then getting an adverse ruling would be very rare, and therefore this authority would largely remain non-functional as we see it. Another important aspect is that once one approaches this National Appellate Authority, then if you look at the kind of stakeholders that are involved, whom will be heard by the appellate authority and then the ruling would be pronounced, is simply mind-boggling. Why I'm saying that? Because if you see the Constitution 101C, once someone files an appeal before the National Appellate Authority, then they will not only call that appellant, they will call the commissioners of all the states across India, because they are also will be ultimately affected by this ruling given by the National Appellate Authority. They will call all the state and center authorities of both the respective states where one delivered favorable verdict, another delivered adverse verdict. And only after hearing all these parties, that is all commissioners of state across India, central authorities of both the states where they have got a conflicting ruling, in that situation, after hearing all these interested parties, only thereafter this authority would be able to decide the appeal. So as you can see, it will be a cumbersome process. Hello. Hello. Am I audible now?
Sir, yes, sir.
Okay. Sorry. I think there was some network issues. Anyway, now I think. Yeah. Okay. So now let us see the issues. I think. Yeah. Okay. So the first issue that we need to deal with is the issue regarding the constitutional validity of the authority itself. That is both the authorities, that is the advanced ruling authority as well as the appellate authorities. Now, two petitions right now are pending in the Rajasthan High Court where they have challenged the validity of the authority. Now, basically the challenge stems from the Supreme Court decision where the petitioners are saying that the current constitution of the advanced ruling authorities, where it is basically manned only by the revenue officers, is against the decision in the case of R. Gandhi, where the Supreme Court took a view that wherever tribunals are vested with the judicial power, then those tribunals should possess independence, security, and capacity to assess the issues independently, and therefore they should be manned by the judicial officers. Technical members can be involved only to render the specific advice on the technical issues, but it should be presided by the judicial members. So it is on that ground that the challenge has been put. Now, I would here offer my comments to say that if you see the decision of Supreme Court in case of R. Gandhi, which is the basis for the challenge, the Supreme Court made a distinction between court and tribunals, and they say that the courts are basically established by the states to under their inherent power to deliver justice to the citizens because under the constitutional framework the state is required to establish courts for delivering the justice. Those courts are exclusively manned by the judges, and the courts are governed by the CPC, that is the Code of Civil Procedure, and the evidence law. As opposed to this, the Supreme Court said that the tribunals are created under a statute, under a specific statute. Those tribunals are also manned by the judicial members, but can have a technical member to support the judicial member in rendering justice. And the tribunals can regulate their own procedures. They are not bound by CPC or evidence law, the rigors of this law. They can set up their own procedures, and they are not restricted by the strict rules of evidence law. So it is in that context that the Supreme Court in this particular case said that the tribunals which are established are undertaking the role of a court only in terms of adjudicating and settling the disputes between the government and the taxpayer, and therefore they should have independence. I would say that the ratio of this decision cannot be applied to challenge the advanced ruling authority for the reason that here, although we are dealing with a situation where there is a dispute, but this dispute is not created by the department. The list is not initiated by the department. It is here a case where the applicant is apprehending a dispute and going before the authorities to get an answer of that authority on that dispute. So it is not a situation where the authority is resolving a dispute where the rights of the citizen or the rights of the taxpayer has been trampled upon by the authority by initiating the proceedings against the taxpayer, and now that particular taxpayer is challenging those proceedings and coming before the tribunal to resolve that matter. So it is in that context I would say that this decision may not apply, and therefore I would say that this is an authority where it is an invitation given to the taxpayer to approach them. There is no initiation of the department or a mandate from the department to compulsorily approach the authorities. Therefore, we say that here the person who is approaching the authority is an applicant, not an aggrieved party. And therefore, I would say that although this authority is rendering the decisions which are binding on the applicants and the officer qua that applicant, but they cannot be considered as tribunals, so to say, in the context of challenging the validity of the authority, because they are not resolving the dispute adjudicated or initiated by the department. And therefore, I would to that extent say that this constitution of this authority, which is completely discretionary at the end of the applicant, is to be required to be considered as a valid. Second issue relates to applicant who can apply, who can approach the authority. Now here is a situation where, let us say, there is a holding company against whom already a proceedings have been initiated on a particular issue. Now they want to approach to that authority. Certainly they are debarred, because as we saw earlier, the law itself says that if one proceedings have been initiated on a particular matter, then that matter gets outside the jurisdiction of the advanced ruling authority. They cannot give any ruling on that matter. However, can a subsidiary company to that holding company apply for the advanced ruling? Answer is yes, because as we see, the law says any applicant that has been defined to mean a person who is registered or desiring of registering can apply. We already know the definition of person. They consider all the companies as separate persons, and therefore holding and subsidiary are separate entities, and therefore unless proceedings have been initiated against that subsidiary, a subsidiary will be well within their rights to apply to that authority, to approach to that authority to get a ruling. This issue already stands settled by Gujarat High Court in the case of GSPL. Second is, can a recipient to a supply file the advance file for a ruling? It happens many times that, let us say, it happens in a construction sector often, that that a developer is saying that this particular supply is liable to tax at so and so rate at on a so and so value. As a customer, he may be aggrieved by the view of that particular developer, and therefore he may want to apply for an advance ruling to get the findings of the advance ruling authority as to what is the tax liability on that particular supply. In that situation, can the recipient do it? If you see section 97, if you read it plainly, it may suggest that yes, he can do it, because applicant means any person. So person means an individual, and therefore a recipient also can file for an advance ruling. But that view would not be correct, in my opinion, for two reasons. One is, if you see the definition of applicant, it says a person who is registered or desiring of obtaining registration. Here is a situation where there is a recipient of supply, where he is neither registered nor he is having any desire to register, because he is nowhere required or liable to register as a recipient of a supply. And therefore, in my opinion, on this ground itself, such recipients cannot be considered as an applicant who can approach the authority. And second reason is binding effect. If you see the law, 103 says that the rulings are binding on the applicant and the officer. Now take a situation where, let us say, the rulings come out saying that 18% is payable on that particular supply. If that ruling is given to the recipient, but the levy and collection of the tax on that supply is from the supplier under section 9(1). Now in that situation, how will that pan out? Because the supplier would still take a view that this ruling is not binding on me, although he is making a supply on which the ruling has been delivered. But since he was not the applicant, it is the recipient who was the applicant, and therefore that ruling has no longer binding effect on that supplier. He is well within his right to argue that in that situation that ruling will not bind him. He may still continue to pay the tax at 12% or whatever rate that he may have in mind, and not 18% as given by that advanced ruling authority. So this is second reason to say that one has to contextually see and read the law. Lack of binding effect, certainly a view that results into a lack of binding effect, which otherwise is a statutory mandate under 103, cannot be sustained, and therefore this is a second ground for us to say that as a recipient one cannot approach to this authority. We have conflicting advance rulings on this aspect, where initially the Maharashtra Advance Ruling Authority entertained the application filed by the recipient. UP authority did not entertain, and recently we have again a Maharashtra Appellate Authority saying that no, the recipient cannot file for the advance ruling, and therefore any advance ruling obtained by the recipient would not be a valid advance ruling. On that ground itself, the Appellate Authority have quashed the advance ruling that was before them. I believe the last view rendered by the Maharashtra Appellate Authority seems to be the correct view for the two reasons that we already discussed, and therefore only a person who is ultimately liable to pay the tax, or he is liable for registration or desiring of obtaining registration, only those persons could apply or could approach for the authority for the ruling. Can the advance ruling authority deal with the issue relating to place of supply? Now originally this was a controversy. We had certain advance rulings where the authorities did not entertain the ruling, saying that this issue involves determination of place of supply, and the issue related to place of supply is not expressly mentioned under section 97(2), and therefore the authorities refused entertaining those applications which had the question of related to place of supply. Now that matter ultimately went up to High Court, and what the High Court said, first they entertained the writ petition in the case of Sutherland Mortgage Services Inc. Why they entertained the writ petition? They say that the authority rejected the application at the threshold by saying that since this issue involves place of supply, will not entertain it. So they have not passed an order which can be considered to be an appealable order, which can be appealed before the appellate authority of advance ruling, and therefore they say that in absence of any remedy, it is High Court can entertain the petition under Article 226 in such situation. Then the High Court referred to 97(2), and they say that you look at all the clauses, although the clauses A, B, C, D, F, and G are very specific because they deal with specific issues that can be posed before the authorities, be it the issue of classification, whether a certain notification applies, whether time of supply, on the issue of time of supply or valuation. But clause E is very widely worded because it says any issue related to determination of liability to pay tax can also be posed before the authorities. So they say that if you want to determine the liability to pay tax, certainly one has to determine where the place of supply is, because if it is found that the place of supply is outside India and it is found that other conditions in law are also satisfied, it may well be a situation where there may not be any liability to pay tax, or in a situation where, let us say, place of supply may be outside the state, then in that situation the liability could be of IGST, or if the place of supply is within the state, the liability could be of CGST or SGST. So the High Court observed that in such situation the place of supply is very well required to determine the liability to pay tax, and that is the question on which a ruling can be sought, and therefore they say that even the question related to place of supply is required to be entertained by the advance ruling authority because it is essential for determination of liability, and that is already covered under clause E of section 97(2). So they directed the authority to consider the application and issue a ruling on the matters that were posed before that authority. So I think this is now fairly settled. I don't think practically now authorities are refusing the applications merely on the ground that it involves the issue of place of supply. Now this is a very interesting topic that we need to deal with. Let us say someone ideally should not commit the sin of approaching before the authorities, but let us say if someone does commit that sin, they go to the authority, they get an adverse ruling, they go to the appellate authority, they file an appeal against that adverse order, there again they get an adverse appeal order. In that situation, what can be the remedy? Because in statute there is no remedy provided. Now to understand this issue, one has to first understand three important articles under our constitution, because this is vital to really understand the next slide that we are going to discuss. Now under Article 136, an extraordinary jurisdiction has been given to the Supreme Court, whereby they say that the Supreme Court is at its discretion, it's a discretionary jurisdiction, can entertain a special leave to appeal from any judgment or any order which is passed or made by any court or tribunal within the entire territory of India. Similar power has been vested to the High Court also under Article 226, read with Article 227, where High Court has a superintendent's power over all the courts and tribunals within that territorial jurisdiction, and by virtue of a power to superintend that courts or tribunal, High Court also has a power to review the orders which are passed by such courts or tribunals which are subordinate to that High Court. Now it is in this context that we need to understand that after the appellate order is rendered, which is adverse to that particular applicant, then can he go to the Supreme Court under Article 136, or can he go to the High Court under Article 226 read with 227, or he is remediless in absence of any statutory remedy given under the CGST law. Now to understand that issue, we need to understand three principal issues involved. Whether, first issue is, can a judicial review to an order which is passed by any authority, be it an advance ruling authority or an appellate advance ruling authority, can a judicial review be ousted by not providing any remedy in the statute itself. So that is first issue that we need to understand. Second is, can these authorities be considered as a tribunal? Because as we saw under Article 136 or under Article 226, read with 227, the High Court and Supreme Court has a jurisdiction over the decisions rendered by the court or tribunal. Certainly, this authority is not the court, the advance ruling authority or the appellate advance ruling authority. It is not constituted under the constitutional mandate given to the state to establish the courts in our country. So we are left with the question of, can this be considered as a tribunal, so as to say that the orders passed by these authorities are that of a tribunal, and therefore the power is given to the High Court or the Supreme Court to review those orders. And the last issue is the scope of judicial review, that if the review is possible, what are the aspects that the High Court or Supreme Court can deal with in such situations. So let us quickly resolve all the three issues. A leading decision on this issue is of Columbia Sportswear Company, where Supreme Court had to deal with a similar advance ruling mechanism that was there under the income tax law. Now, on the first issue of whether this advance ruling authority can be considered as a tribunal or not, they say yes, it is a tribunal. They refer to the history of judicial precedents to say that any authority which is vested with a judicial power to pronounce on the rights of a certain taxpayer, those authorities are considered as a tribunal because they are rendering a judicial function, because they are deciding the rights and the obligations of that particular person under a special law. Second reasoning that the Supreme Court said that the authority is determining an issue of fact and law, and therefore there is a judicial power exercised by that authority in resolving that issue. And third factor that the Supreme Court considered is that these rulings are binding on the applicant and the authorities. Because of the binding force, they are in fact entering into the rights and the obligations of the parties involved, and therefore they are the powers that are exercised by such authorities are judicial powers, and therefore the Supreme Court said that these are tribunals as far as the aspect of review is concerned under Article 136 or 226. Then they say that in absence of a remedy provided in the law, that is in the context of GST, there is no remedy provided in law against the appellate orders. Now, Supreme Court said that absence in a statute cannot negate the otherwise jurisdiction of a High Court or a Supreme Court under the Constitution. Certainly, constitutional provisions are supreme. It is under the constitutional provision that all the laws are framed in our country. So the Supreme Court said that legislature, by not providing any further remedy, cannot lead to a conclusion to say that because of no remedy provided in a statute, the court cannot exercise their constitutional power which is otherwise exercisable in a particular situation. So they answered the second issue also. They are saying that just because remedy is not there in law, in a statute, would not ousted or would not result into a situation where the courts would not be able to exercise their jurisdiction mandated by the Constitution. Now, on the third issue of whether 136 versus 226, that is whether can one directly go to the Supreme Court and not to the jurisdictional High Court, the Supreme Court said that both the powers are discretionary. So the Supreme Court ultimately held that we can go to the Supreme Court only if the issue is of general public importance. Otherwise, they say that first you go to the High Court, and then based on the findings of the High Court, the orders of the High Court, probably a special leave can then be preferred before the Supreme Court. Unless that issue is not of general importance, one cannot straight away go to the Supreme Court. One has to first knock the doors of the High Court under Article 226. However, the Supreme Court said at the same time that if the similar issue is already pending for decision before the Supreme Court, then you can straight away knock the doors of the Supreme Court under 136. You need not go first to the High Court under 226 and then to the Supreme Court under 136. I mean, this given facts where the issue related to this applicant was concerned, that is Columbia Sportswear, they say that this is not an issue which is of general importance, neither this is an issue which is already pending before the Supreme Court. So the Supreme Court said that we will not entertain the petition. We will direct the jurisdictional High Court to entertain the petition. They also said one more important aspect, that since this is related to advance ruling where the time is of essence, If the High Court sits into that application for years and years, then it will lose the very purpose for which the advanced ruling mechanism has been constituted. And therefore, the High Court said that otherwise normally the matter would first go to a single member and then it will be referred to the division bench, and then division bench would entertain the petitions under 226. The Supreme Court said that in such situations, straight away division bench can entertain the petitions under 226. And they also said that in such situations, those petitions should be disposed of as expeditiously as possible. So these findings, in my opinion, are equally applicable in the context of GST. So yes, advanced ruling authority or appellate authority for advanced ruling is a tribunal as far as judicial review is concerned under 226 or 136. Absence of remedy in GST law cannot debar one from exercising their right to approach the High Court or the Supreme Court and seek the exercise of their discretionary power. One cannot, and the last one cannot straight away approach the Supreme Court unless, as we discussed, if similar issue is pending, one will have to first approach the High Court and then one can approach the Supreme Court. Similar view has been taken even recently, Supreme Court in the case of National Cooperative Development Corporation, again in the context of income tax advanced ruling mechanism, reiterated the same view. Mechanism, constitution more or less is similar, so the ratio would equally apply even in the context of GST. Now, the second aspect that we need to consider is the scope of judicial review. Now, this is important. Under Article 226, it is not an appellate jurisdiction that is exercised by the High Court. It is a discretionary jurisdiction which is exercised by the High Court. And therefore, how the High Courts have dealt with the petitions filed under 226 challenging the orders of the advanced ruling appellate authorities is to say that the scope would be limited. We will look at the decision-making process. Will not adjudicate the facts, will not adjudicate or entertain any new facts which otherwise is permissible under an appellate jurisdiction. They say that our review will be limited to understanding jurisdictional errors, understanding whether any error of law has been committed, whether any principle of natural justice has been violated, or whether the decisions are totally perverse. It is in these situations only that the courts will entertain. Otherwise, if the views are plausible, if the view rendered by the advanced ruling authority is plausible, if there is no breach of principles of natural justice, if the findings are not perverse, if there are no errors committed in law, in that situation, then the High Court would not entertain, because this is not an appellate jurisdiction, this is a review jurisdiction. Same view has also been reiterated, Allahabad High Court, Bombay High Court, and then there are a number of High Courts where they have repeated the same findings. So as an example, if let us say ex parte orders are passed, there the High Courts have entertained because natural justice have been violated, where opportunity was not given to the applicant to submit their their submissions on the issue. There the High Court said, yes, we will interfere and we will remand back the matter to the original advanced ruling authority. Where the contention were expressed, but it were neither considered nor answered, in that situation also the High Court said we will remand the matter back for fresh consideration. Where the decision making was flawed, where certain submissions were made by the applicant but they were not at all considered by the authorities, which is largely the case. So in that situation also the High Court quashed the matters and remanded the matters back for the fresh adjudications. Where legal ratio, where subtle propositions are there and they have not been considered by the authorities, even in that situation the High Courts have interfered and the High Courts have quashed those orders and they have remitted back the matters to the original authorities for a fresh consideration. So in a nutshell, in a judicial review, whenever you are contesting, whenever you are filing a special leave under 226, please be very careful to indicate to the High Court that there is a flaw in decision making. There are certain legal propositions which have not been considered. There are certain legal grounds which were submitted but not at all considered, or no findings are there of the authority on those grounds. Where certain facts were there, certain grounds were there but totally ignored by the authorities. Where natural justice have been ignored, no hearing has been given or a very perfunctory hearing has been given, or there are certain legal ratios which have not been considered. So it is in all those situations, once you highlight those facts, then the court will assume the jurisdiction under 226 and it is by that process that you will be able to vacate those adverse rulings, remand, and get a remand of those orders. Please be very careful here that if you get a remand to the original authority, you will still have the right to withdraw the application, because once the matter will be remanded back for fresh consideration to the original authority, in that situation, since you already tested the water, since you know the mind, you know how the mind of the authorities operate, in that situation you will then have a possibility to withdraw the application rather than to pursue the application. But if the remand goes to the appellate authority by the High Court, then you will not be saved, because in that situation you will not be able to withdraw, because what you will withdraw will be an appeal, not the order already passed, which was before the challenge before the appellate authority. So in that situation, please be very careful. Better strategy would be to get a verdict where the remand is to the original authority by finding the defect in the findings of the original authority itself, so that by this process you get the matter again back to the original jurisdiction of the advance ruling authority, and it is through that process that you can then maybe consider withdrawing the application to save further trouble rather than still pursuing the matter. Of course, you cannot go to the High Court urging new grounds, urging new facts which were never canvassed before the advance ruling authority or the appellate authority, because High Court does not sit into an appeal jurisdiction to adjudicate the facts. So in that situation, please be careful. Don't file a petition saying this is the new fact which we want to urge. High Court will not entertain. This is a new ground that you want to urge. Even in this situation, the High Court will not entertain. So please be careful while approaching the High Court under 226 if you are in a situation where you have got an adverse appellate ruling order. Can you directly challenge the advance ruling order rather than first exhausting the remedy of going into an appeal before the appellate authority and then going to the High Court under 226? Direct challenge is possible only if the principles of natural justice have been violated. So let us say hearing has never been given to you. In that situation, if the order has been passed, that orders can be challenged straight away under Article 226, because this is a situation where natural justice itself has not been adhered. It is not a question of appellate authority to decide any grounds which was before them. It is a question of you not allowing itself to put your grounds before the original authority itself. So in that situation, you can straight away approach the High Court. You may not have to go to the exhaust the remedy of going into an appeal and then approaching the High Court. But in all other situations when natural justice is not violated, since alternate remedy is possible, better view would be first to go to the appellate authority, put whatever additional grounds that you may have, additional facts that you may have. They may not deal with those facts, those grounds. Better for you, because non-dealing or erroneous dealing or non-consideration of subtle ratios, those facts which will now become evident from the order itself, where your submissions would be noted and their findings would be noted, that will be a ground for you to then file a petition under 226 to get those proceedings quashed. Scope of authority: can the advance ruling authority go beyond the referred issue? The clear answer is no. 98(4) says where an application is admitted by the authority, they have to pronounce the ruling on the question specified in the application. In fact, in one of the cases which happened before the Kerala High Court, the question put was in context of supply of goods A. The authority went and delivered a finding on supply of connected goods B. So the High Court said this cannot be done. Under law, the authority has to limit their findings only on the question which is asked, not on any other question that they may deem fit or they may want to consider also along with the question that has been sought in that application. That scope is not there. However, this is very interesting, whether appellate authority can expand the scope. So take a situation where on certain ground the advance ruling authority has given an adverse order. Now you go to the appellate authority on the grounds on which the first authority had given an adverse order. On those grounds, the appellate authority is convinced that the order is erroneous and therefore deserves to be reversed. However, the appellate authority has his own other grounds to say that because of these additional grounds, I am still confirming the order of the first authority, that is the original authority, I am not reversing the order. Can this be done? Now this question arose in the case of JSW Energy before the Bombay High Court. It was submitted that this appellate authority is just like a tribunal. In tribunal, we have a settled ratio that the tribunal has to adjudicate within the context of the grounds taken by the department in their show cause notice, and the reply is furnished by the taxpayer against that notice, and therefore the tribunal cannot travel beyond the grounds taken in the show cause notice. So that was urged. Bombay High Court did not accept this argument. Bombay High Court took a view that, look, in adversarial proceedings where department initiates the action first in terms of issuing the notice, and then the onus is on the taxpayer to respond to the allegations made in that notice. In an adversarial setup, the review authorities, that is the appellate authorities, have to then confine themselves to that conflict that is before them. But in the context of advance ruling, the situation is different, because here is a situation where the taxpayer is voluntarily going before the advance ruling authority. There is no adversarial ruling, adversarial situation where some allegations are made against that taxpayer, and now taxpayer is made answerable for those allegations. So Bombay High Court took a view that, look, here, since no allegations are made by the department, these are not adversarial rulings, so as to prevent the appellate authority from giving additional grounds to support their order. So in that context, the Bombay High Court said that yes, appellate authority can give additional grounds to while delivering their ruling on that particular appeal. Now, binding. Now, whether these decisions are binding. Now, as we understand, we have to look at this aspect from two perspectives: binding on the applicant, binding on the other parties, other taxpayers. As far as applicant is concerned, we already saw earlier in 103, it is binding between the applicant and the concerned jurisdictional officer. Although the law has not defined what is officer and jurisdictional officer, but what we understand is that since it is binding, so jurisdictional officer could be any jurisdictional officer, not necessarily only the audit range or the executive range, even let us say a DGGI, who also assumes jurisdiction over their particular taxpayer. For them also it would be binding as far as that issue is concerned. Now, interesting issue will arise that whether even after the ruling has been pronounced, which is adverse, can still taxpayer opt to not follow that ruling and pay the tax according to his own understanding of law, or continue to claim credits as per his understanding of law. Now, this is a very interesting issue, friends, for the simple reason that 103 creates a binding effect only between the applicant and the officer. It does not create a binding effect between the applicant and the quasi-judicial authorities or the judicial authorities. So as far as the appellate authorities are concerned, be it the commissioner appeals or tribunal as and when it is constituted, or be it the courts, they are not considered under 103 to say that they are also bound by this ruling. So they have their own discretionary power to still adjudicate and render their decisions on the disputes. Another aspect to consider here is that if you look at 7512, recovery of only self-assessed tax is permissible without issuance of show cause notice. Now, what is a self-assessed tax? It is a tax declared in the return or a statement filed by the taxpayer. 75 does not say that once an adverse advance ruling has been given to you, any liability qua that adverse advance ruling would also be considered as a self-assessed tax. No, it means that even after the advance ruling is rendered, if the department, if that particular applicant is not abiding by that advance ruling, and if the department wants to recover any dues, they will have to still go to section 73 and 74, issue a show cause notice and adjudicate that show cause notice separately and independently. Now, if ultimately those orders are challenged before the appellate authorities, that is either first appellate authority under 107 or a tribunal under 112, or even high courts under 117 or Supreme Court under 118. If you see the scheme of the act, any appellate orders, first appeal authorities or high court or Supreme Court has not been constrained to say that their orders have to be in agreement with the advance ruling authority. They have been given full liberty to pass any order that they think just and proper. Second, 107 subsection 16 and 113 subsection 6 says that orders passed by such appellate authorities or quasi-judicial authorities would be binding. So these orders also create a binding effect. These are all not saying that this would basically be subordinate to the binding effect created under 103. So in my opinion, even an adverse ruling is rendered, still that findings of that adverse rulings would not mean that they are final. Department is required to issue a show cause notice if certain taxpayer or applicant is not following that advance ruling, and against that proceeding he will be at a liberty to again contest those matters, those issues before the quasi-judicial or judicial authorities. Quasi-judicial or judicial authorities are not bound by the advance rulings that have been rendered. 103 does not apply to them. Further, under 107 or 113, their orders are created as final and binding on the taxpayers. So in this context, I would submit that yes, quasi-judicial, judicial authorities would have the liberty to again examine those issues if the taxpayer is not following the adverse orders or not paying the dues as per the adverse orders. For other persons, certainly not binding. 103 does not apply at all. Already, in fact, CBIC also in their clarification dated 29th May 2018 have said that these are not binding on other applicants, other taxpayers. Whether it will have a persuasive value, I would say it would not even have a persuasive value, although it is what law is in that context. Why I'm saying this? Because the constitution of this authority is starkly different from what was in the earlier regime. We don't have any retired Supreme Court judges who are manning these authorities, so the orders are of not that quality or caliber as opposed to what we had in the earlier regime. So this ruling should ideally not have a persuasive value, but as we say, we live in reality. And as Kurt Vonnegut observed in his book, Welcome to the Monkey House, where he says that a sane person living in an insane society will also appear insane. So a sane taxpayer working with a department which does not respect sanity at times will also be looked at, the taxpayer will be looked at as not sane, and therefore those authorities would still get driven by these rulings and would consider this as a persuasive value. In my opinion, those rulings, such rulings should not even have any persuasive value. Now, rectification versus appeal, this is very interesting, friends. Why I'm saying this? Because as we saw earlier, the time limit to seek rectification and get the rectification order amended is 6 months. Time limit to file an appeal is 30 days from the date the ruling is communicated. Now, a situation happened in the case of NMDC. This is the last slide. The situation happened in this particular case where this is a government entity. It's a big government entity. What they did, that they got an adverse ruling. They filed an application for rectification. Ultimately, that rectification was rejected, saying that there is no apparent order, there is no apparent error in the order. By that time, the statutory time limit of filing an appeal of 30 days and extended 30 days, that is in aggregate 60 days, was already over. After the rejection of the rectification application, they filed an appeal. That appeal got rejected. It was not admitted on the ground of limitation itself, saying that this appeal is filed after a period of 60 days. So they went to the High Court. Now the High Court had interesting findings. The High Court, relying on the Supreme Court decision in the case of ONGC followed by GlaxoSmithKline's case, said that look, when there is a statutory time limit given in law for filing an appeal, no court of this country can condone that time limit. In fact, the Supreme Court, while delivering the ONGC decision, referred to the Limitation Act, and they say look at section 29(2) of the Limitation Act. It says that if there is a special law which has certain special time limits which are different from the general time limits given under the Limitation Act, then that would prevail. That is, the time limits under the special statute would prevail. The general limitations under the Limitation Act would not prevail. In case of GlaxoSmithKline also, the Supreme Court reiterated the findings. They say that look, we don't have any liberty under the statute to extend the time limit, to condone the time limit beyond what is permissible under the statute. Doing that would result into ultimately going against the legislative mandate. And the Supreme Court, in fact, Kerala High Court also observed that look, law can assist only those parties who are vigilant. Law cannot assist those who are sleeping. So it is with that context they say they decline to interfere. They say that since in this situation you have filed the appeal after the statutory time limit, whatever may be the reason, it will not be entertained. Now, in this situation, this judgment has to be seen in the context. It was a context where the rectification application was rejected at the threshold itself by saying that there is no error apparent from record. So in that situation, the doctrine of merger will not apply, where the original advance ruling order cannot be said to get merged with the rectification order. And therefore, the Karnataka High Court in that situation said that the time limit of 60 days would start from the date of the original order and not from the date on which your request for rectification was rejected. No merger happens, and therefore the time limit starts from the original date. In a situation where, let us say, the rectification application is entertained by the authorities and the original order is rectified, in that situation, then that original order gets merged with the rectification order, and therefore in that situation the time limit to file an appeal would start from the date of the rectification order. But in a practical situation, you never know whether your rectification application would be entertained or not. So in that situation, I would request that one should, if one finds an error apparent from record, one should follow both the remedies simultaneously. There is no bar on that. One should file the rectification application, and one should also file an appeal within the statutory time limit of 30 days with a non-prejudice clause, that this appeal is without prejudice to the rectification application. So if rectification application gets entertained and if the order gets rectified, then that rectified order would then be the base for this appeal to further be entertained and decided. So it is with that particular clause, I think one must undertake both the activities of filing a rectification as well as filing an appeal, because if at the end of 6th month, if it is found that your rectification application is not entertained, and it is at that point in time that then you file an appeal, then perhaps that appeal will also not be entertained on simple ground of limitation, and then the person would become remediless. And as we saw, even the High Court or the Supreme Court would not then in that situation be able to save that particular case. So with that, I thank the organizers. I think what message I have been able to convey over this last 1.5 hours is to give you different grounds to say that please be very aware. Don't go to these authorities unless you have very pressing need, unless you are sure of the outcome. And let me tell you, imagine adverse outcome worse than what you could have even imagined otherwise. And if that is the outcome that you are looking at, and that you consider it to be favorable, there can be reasons. Like, for example, one of the client had approached us saying that he has a government contract and government says they will pay 18% only if you get an advance ruling saying 18% is liable. There we were confident because we know advance ruling authorities would anyway give us 18% only. They would not give us concessional rate of 12%. And once we get an 18%, we'll be able to recover that 18% from the government. That otherwise would not be recoverable if we don't go to the advance ruling authority and pay 12% and then get into a dispute tomorrow with the authorities. So it is with that mindset where if you know that the answer that you would get, which would certainly be an adverse answer in almost all cases, if that adverse answer is what you are looking at, only with that in mind, probably you can perhaps approach the authorities. Otherwise, I would never ever recommend anyone to really approach these authorities, because as you would have seen, the consequences would be severe and you will get into a long drawn process of litigation for years to come on that issue. So with that, I again thank the WIRC for the kind opportunity.
Any queries that are there, Mishra sir?
मैडम आपको चैट में क्वेश्चन दे रहा हूँ मैम.
I can't view the questions.
चैट में आया क्वेश्चन आपको?
So the first question is, the AAR is binding only on the jurisdictional officer. If DGGI or anti-evasion wing, can they take another view and initiate proceedings?
No, so as I said, jurisdictional officer is not defined in law. So when DGGI assumes jurisdiction over you, I'm assuming you are the applicant who has got a ruling, probably a favorable ruling, and therefore this question would have arisen. In that situation, then DGGI will be considered as a jurisdictional officer when they assume jurisdiction over you by initiating any action under 67 by way of search or 70 by way of summons. So in that situation, the ruling would bind them also. They cannot escape the ruling by saying that we are not the jurisdictional officer. When you look at jurisdiction, we look at jurisdiction not limited to territorial jurisdiction, but even functional jurisdiction. So DGGI assumes functional jurisdiction when they initiate any proceedings against you, and therefore they would also be bound by this ruling, whatever you have that you have obtained.
Okay. The other question is, as the Supreme Court has held that the AAR or AAAR are tribunal, can the government be challenged to appoint the judges of the competence similar to the tribunal to exercise the judicial independence and competence instead of the revenue authorities? Can a writ be filed by ICAI or any other institution or any other association? Please guide.
Right. It's a very good question. In fact, I was expecting the question because I thought someone would notice that inconsistency. Wherein on one side, when we were discussing the Rajasthan High Court writ, I expressed the view that this AR or triple AR cannot be considered as a tribunal, so as to say that they should be manned by judicial officers. But at the same time, when we discussed Article 226 and filing a writ challenging the findings of AR or triple AR under the judicial review, we said it is akin to a tribunal. Now let me explain this inconsistency. In fact, there is no inconsistency. We are talking about different roles. When we look at constitution and when constitution of AR or triple AR, and then when we say that they are akin to a tribunal, from a constitutional standpoint, they are not given the powers vested with the tribunal to resolve a dispute that is initiated by the department. They are looking at a proceeding which is basically initiated by the taxpayer themselves by approaching to these authorities. So in that context, as far as the manning of this authority by judicial persons are concerned, we cannot say to the court that look, they should be manned by the judicial persons only. It's a prerogative of the legislature. If legislator in their wisdom while formulating the GST Act have manned these authorities by their own officers, that wisdom cannot be challenged because you are not compelled to go through these authorities. It is at your discretion that you are going there. Unlike a judicial forum where one is compelled to get a remedy under the constitutional mandate of division of power, where courts are especially set up as by a state, mandated by the state to render justice. So it is in that context that I said that under 226 the power can be exercised. But as far as insisting on saying that they should be manned by judicial persons, I think that argument may not work.
Okay. If the applicant has sought advance rulings in respect of non-taxability of any goods or services or taxability at a lower rate, what should he do while the ruling is still pending to be pronounced or pending before the High Court?
See, as far as withdrawal is concerned, I'm presuming this question deals with if one can withdraw. In my opinion, one can withdraw anytime before the pronouncement of the ruling. So in fact, we have certain advance rulings where they permitted, in fact, they were recorded at the time of permitting the withdrawal, that even after the hearing, they are permitting the withdrawal because those rulings were not pronounced. So there is a wisdom in withdrawing the ruling if you can apprehend during the hearing itself that in what direction the ruling is expected. But certainly once it is pronounced that you cannot withdraw it, you will have to then travel upwards only. And then at some stage, you will get a kind of a option of getting those matters back to the original authorities and then seek a withdrawal from that forum.
Okay. The other question is, Will he be liable to pay interest if the service or goods are held to be taxable by the AAAR or High Court in above question, in this question itself?
No, so see, High Court, only the rulings are binding if you are an applicant to that ruling. So if you are not an applicant, then they are not binding. Even as far as applicant are concerned, as we discussed, if someone is not paying any dues based on that ruling, still the department has to initiate proceedings under 73 or 74 as the case is to recover those dues. So there is no automatic liability that in my opinion would accrue on the basis of the advance rulings.
Okay, so that was the last question, sir. Thank you so much for the elaborate explanation of all the questions and such a enlightening session. I am sure everybody got a very fair view of the advance rulings in depth, and it was a wonderful session. Thank you
so
so much.
Thank you.